Good morning, Sonny. Working on getting some stuff out. Well, FFIE. I haven't looked at FFIE in a minute. Maybe we could check that one out. I'm gonna try to get a list going. I had one, but one is Palantir, maybe some May $60 puts. Let's see if FFIE produces anything. And I think there was someone who had asked me the other day about those. Man, I can't remember what they're called though, but those airline stocks. So Fang looking pretty ugly this morning. Not that a lot of people are that interested in it, but it looks pretty bad. It's already oversold on the 6-minute. Dropped pretty far here. This is distribution, so I mean there's no if and buts about it. As soon as it plunges through, and it opened basically dropping through this level, and so it literally broke like 1, 2, 3, 4 creeks now, 5. I mean, it's just going through everything. It's clearly like a flush. Unfortunately, yesterday it was a hard read because it sort of popped up like slightly over the trend and kept closing beneath it. But it was hard to know because it didn't really come very high. I think it was like a double top rejection, so it is what it is. But we've seen this before, this kind of pattern, and it's just a UTAD, or upthrust after distribution. I really don't think it was, actually would probably even describe it as just an upthrust, not a UTAD, because this might be one, but because really like it just doesn't give any serious signs of weakness early on, in my opinion. But there's a gap down at 156, so it's looking kind of ugly. And unfortunately, it didn't get quite as high as I would have liked. I was really hoping it would get that last pop, and it didn't happen. So we'll see. Hey, what's up, Squishy? Squishy! That's a fun name. So anywho, yeah, we'll see what happens. I don't know. I'm really bullish on it for the after earnings, but I think that there's certainly a mixed bag here. Technicals going into earnings, there's a lot to say about it, but I'll just leave it at that. I think it's probably going to come back down. And then AMD is another one I've been watching carefully. And I think it might be doing the head and shoulder thing now. So I had suspected it's going to come low, and it did, I think, make a new low here. So it went through. This is the high. This is a low of 113.15. This is a low of 113.11. So it did break down through that level, and now it's pumping back up. It's pretty much, again, just setting up like a quasi head and shoulder setup, and I don't expect it's going to hold. So I think this is going to be pretty bearish today, coming back down more than likely. And I had actually had some put positions, and I'm thinking that might even get some more because I'm pretty sure it's going to come back down. I could be wrong, and if I'm wrong, it's going to hold above 114.30, but I don't think I'm wrong about this particular setup. I think it's not the best. So, yeah, I don't think the market's believing it either as a push, so there's that. I guess the only thing we could really do is look at bigger picture stuff, but I think it looks like a hook. I mean, I guess if it pushed up one more time, could technically break out if it just went. But it'd have to get pretty high. I'm just not convinced it's going to do it. Yeah, I mean, it made an advancement here and then immediately went down and made a new low there. So it's checking top and bottom. I don't know, man. This happened before on a AMD though, and it didn't kind of end as expected. I think in this case it went low first, then high, then made a higher high. Same thing here. It went down and up. Did the same thing right here. It made a new low, then it went up. Now it's going up and then going down. I still think it looks weak, but it's a tough bet. Especially when it opens green, I'm kind of feeling bullish about it. We'll kind of keep an eye on that. I might need to look at like a weekly candle also. As you know, it's Friday. It's starting to get to that point where the candle should be sort of finishing whatever it's doing. And it's an indifference candle. Looks like it's going to close. Well, if it closed below 114.30, I think it's going to be pretty bearish looking. If it closes above, I think it's just going to be mixed. You may see it go either way. Yeah, just still have some trouble. It's still trying to turn. What about the daily from yesterday? Yeah, they're all the same. They're all kind of mixed. This is the first one that broke down. It almost doesn't look like it did it? On the daily. I always find that to be kind of interesting when you can see the breakdown like clearly on a lower time frame, but then you look at the higher time frame and there's nothing there. That's really odd to me. And there's still a decent amount of volume, open interest on these. AMC's up 0.84%, and I'm going to look at that in a minute, but I really wanted to see what happened at this top. I didn't see anything that looked like an SOW. It looked like it kind of built out. Not really seeing a lot of heavy selling volume just yet. For GME, it made the advance yesterday. It never really got anywhere else. It's right where I thought it might be for like a potential head and shoulder. So we will see. I'm not positive it's going to do it. I said yesterday I'm a bit indifferent about it because really it makes no difference here. If it builds out strong today, whether it's a spring or an LPS, I don't really care. As long as there's something there to look at, then I think it's maybe worth your time investing in a potential run here. Because like with AMC and GME, both of them have a potential here to kind of shoulder and drop. It's pretty obvious why. I mean, you can see on AMC the breakdown 1 and then 2. It's just layering down. And so it's a complex head and shoulder, would drive you all the way back down to 323, potentially by earnings. And for what it's worth, I think that most of these stocks are in a similar situation where you've got potential, sure, for some upside and just going and having more strength built today, but there's a huge amount of hesitation, I should say, in the market's price actions today, and I think it's just a sign of, again, people not really buying into the idea that we're necessarily running. I would say that every one of these stocks is in a situation where you could kind of have that LPS. You could have it hold here, could have it hold here, you could have it hold, you know, here. There's all kinds of similarities there, but the normal pattern here would be one of typically a breakdown. Like I'm seeing a consistency in that. So at least for now, my expectations are pretty low that this is going to continue in a more bullish manner, albeit I would not be opposed to it, especially on AMC. I think AMC is the one I'm looking at the strongest as like a contender for this LPS, maybe GME as well, but mostly AMC I feel has the strongest potential for that. And I really don't see anything horrible about AMD right now, but it needs to make some serious moves in order to kind of convince me it's not going to drop next week. And I'd be very curious to see where that candle lands. So it's interesting, again, on the daily, there's no breakdown. There is a SOW still, like it widened, went high, and then dropped below the floor, which is unusual. And it certainly is more backwards than you would prefer. You don't really want to see it push to a high first and then sell down through a new low. It's okay if it goes the other way, because the double flush, as I call it, is a liquidity test. And if the test is first down, more often than not, unless it's like a double or quadruple, rather, I should say, like a triple flush where it goes down, up, down, which does happen, where you're head faking both ways and then you're continuing the original direction. Unless it's something like that, most of the time going down first is actually better, because you're back testing, then you're advancing, and that sounds good to me. Whereas if you're going up to the top and advancing first and then retreating and losing support, that doesn't sound good. So the order in which it happens does matter. Right now, AMD is making me look like an idiot because it's not doing that. It's pushing. So it looks more like an advancement followed by a retreat. That's maybe kind of likened to a spring, and then it goes once it finds support again at 113.62, and it did. And I'm not sure that's going to matter in the end, but we'll see. I think if it breaches high. That's all there is to it. So we're waiting to see what happens, maybe at 116. But like I said, I don't think the market really buying into this, because I'm looking at my options and they're just sitting there. Like, there's not people like pushing that bid in the ask up significantly at all. It's still really low. So I said today what I wanted to do was consider whether AMC is a good buy-in. Oh, nice. Well, congratulations, Relative Decibel. Hey, do you still have the March 7th options? No, I don't have any options for AMC right now. But I hope you understand it's not, it wasn't hidden. You probably just weren't on when I talked about it. So I talked about it on AMC when we hit 350 the first time and we pushed up to about 360. I got out at 360 of all my options, and then I did not play this upside to 376 at all. I played a put position down. So like, if you were to look at my trade, you would see here, let me clean this up a little bit. The reason I'm telling you this is because I want you to understand why I did it and then what I'm looking for. Because it's not that I'm particularly bearish on it. It's just I'm swing trading, so I'm looking for entries and exits. I'm not really looking for a long-term contract hold most of the time. There are times where, yeah, there's an exception, but I might hold it or roll it. So I bought in 2 times, and both of them were basically in the same spot. So they were both right around 330 to 315. So if I had to like pick a buy-in zone, it was basically this little yellow bar that you see. And I bought 2 times because I was a little over anxious, and I bought in here. And I can't remember exactly why I did, or maybe it was down here. It was one of these areas like right in here, but I thought it was going to be a bigger reaction or something, and it really didn't. It didn't move. Anyways, the average that I had was around 320, but there were contracts, so naturally they were different. They didn't say 320. They said some, pocket change or whatever per contract. So my first trade was roughly from this region, again, on an average, up to about here. And I did okay. I mean, I made like, on average, I think I made 20 to 25% on that. And then I actually exited that trade, and the March 7th trade. And then I entered a put position here, and I traded it to just there because it was just an overnight trade, because I know that puts get squashed pretty quick on AMC, and that's it. I'm done. So that was actually a bigger trade. It was like 35% or something, but I didn't put as much money into it. I considered it like a hedge because, and I actually had short-term bought some 330 as well, and I sold some of those. So you guys are like, what? He's a shill. Yeah. So I had an average of about 330. I bought here and here. So I bought 2 times down here. Shares. So this was a shares position, and it was not a contract position. And I sold those as well, all through this top up here. Now, why did I do that? Because first of all, 330 is like really not a huge profit. When you look at the difference between 330 and like where we were, it's like 10%. So from a share standpoint, it's nice, but it's not exactly like breaking the bank. And the reason that I did that is because I'm trying to lower my average, but I don't think that ultimately it's going to just go up from here. I do think it may go up to $4. So I kept some of them for potentially 4, because I'm not positive it's going to come all the way back to 323 again. Does that make sense? So just so you understand my mindset, like there were 2 buys down here for shares. There was 1 contract buy. Well, there was multiple contract buys in here averaging down, but that was really just for the same strike, that March 7th, 4-5. And then I sold those almost all at this top region, and then re-entered into a small, very small overnight put position, and then traded that down. All of these are positive trades, so they all worked really well. I didn't touch AMC. I just want you guys to be aware of this. I hadn't traded AMC since back over here when we broke down. So there was maybe over a month and a half or so, month and a few days that I just didn't trade it. I just kind of let it be. So my trade here was because I was pretty confident we were going to trade this range. So I did some shares, but I think it's a range, and I don't think that ultimately it's going to break 430 or something like that. And if it does, I have a contingency for that, which is I have long-term share positions. I have all my long-term share positions. I don't have any short-term share positions from significantly low anymore, except for my buy-in down here way back. And I guess that's not going to be short-term coming up because, it'll be a year since I bought those. But I bought when we were at, let's see, $2.46, which seems impossible, but that is the case. That's damn near the bottom. I don't know how I did that, but last time I bought like a big share position was right here. I'm not even kidding. I'm like looking at it right now. I was like, oh wow, I really did catch the bottom. That's not easy to do. I didn't think it was that good. I thought it was up here, but that was really good. Pretty much as low as you can get. That's funny, dude. So that's the last time I bought like a quote unquote long-term share position. And I think ever since then, all I've done is kind of swing traded. And I don't think there's anything wrong with that personally, but you guys might think that that's annoying. Like, oh, you're adding selling pressure or something. That's not the way I see it, because the way I see it is the operators are going to take it down regardless of what I do. And I don't think if it's going to go that it matters what I do either. So my buying and selling is negligible. You guys are like, yeah, but if everybody did that. Well, I think everybody is kind of doing that. You know, at this point, people are trying to figure out ways of getting in and out of these trades. So I'm not going to spend any more time kind of defending myself on that. I'm just letting you know, being honest. So I have a hefty little position from 246. I haven't touched it, and I probably won't. And if it comes past April, then it's going to be a long-term trade, April 16th or something. I want to see where I actually bought that. It must have been there because, yeah, April 16th was when I bought it at $2.46. So I'm a big fan of buying on bottoms and selling on tops because I think that's the way you should trade the market. You're like, really? No, duh. But yeah, in this case, this is all like short-term stuff. So while I'm happy to get more at 330, and I've got some that I'm still holding, not all, I'm really more interested in kind of getting my average down. So I actually mixed some of those sells with like some of those. I think I bought some at like 450 and 4s up here, because I was buying a lot in this area thinking that we might take off, and I'm sure that a lot of people did, you know. But I bought some over here before we went up. I didn't sell those because they're just share positions. And so part of what I want to do, part of what I did here rather, is that by averaging down, I could sell some of those shares, so I still made profit, and I can get rid of some of those higher average shares. And I've done my best to do that over time to try to lower my average. So it's not complicated. It's pretty simple math. If you guys need me to explain that more, I can explain it more. But what I would say is that if you have the opportunity, it makes sense to me anyways, because if, like, for example, I have, and I don't want to sit here and lecture people about this because I know that you guys are smart. But if I have a 100 shares at like $5, even though that's still pretty low, that's not a bad average. If I can get shares at 350, right, I could get 200 shares. Well, that's $500. Let's do an easier number, like 6. So I don't have to do like hard math this morning. So that's like $600 worth, right? Now, I'm not saying that you could necessarily do that or afford to do that, but let's say you could pretty easily afford to do that. And I'm just going to keep the math really simple. And I'm just going to say I could buy the exact same amount at, now that's a heftier position. You got $1,000, $1,200 or whatever. So I'm just using bigger numbers, but like, that's pretty straightforward, right? You guys understand that? So at this point, your average would be, not half, not 450. It would actually be heavier towards the 3 side because you have twice as many shares of 3. So the right way to do the math is to take the total number, right, and divide it by whatever the cost is at that time that you try to sell it, or whatever it was the original cost basis. So at that point, it's really different because you have 300 shares, right? And it's $4, right, instead of 450. So by inputting like the same amount, I now have an average of 450 per share, or excuse me, I said 4 because that's right. It should be 4 because you have 2 parts of 3, 1 part of 6. Average of 4 per share. So now, like, even if I wanted to, what I could do is I could wait until 4 and I could get out with a little bit of profit. Like I wait to 4:30. So like option 1 is if you think it's going to go back down, which I do, you could be wrong and then you'd be screwed, but you just have to trade whatever you think is right. You could wait for 4:30 and then you could get out of all of them. And now you have the opportunity, if it does drop, to buy fresh and have a significantly lower average. Because if it comes down, even if it came down to 3 again, right? Or even if it just came to like 350, anything below 4 per share is now going to be a better buy for you. So oddly, what's strange about people in this community sometimes is that even though they think that you're screwing them over by selling and buying, really it's negligible if you do it the way I'm doing it. Because if I sold at 4:30 and then it drops beneath $4, I could take the same amount, right? So I'm going to make money on that, by the way. Maybe not a ton, but I'll make something. We could do the math real quick. Might as well. So you had 1,200 as the original position, but you really have 430 times 300 right now. So you're going to make $90. Now that's not a lot. That's a very, very small amount. But that's more money than you had put in the first place. So now if you take that same amount and you buy anywhere below 4, your average is lower and you're going to get more shares. So if I divide by, let's say even here it comes down to 3, and it's going to have retracements, It's very unlikely this is going to just take off based on everything we've seen. So at worst, maybe it comes down to like 370, or maybe at best, I guess, if that's the way you want to put it, the 1290. So I can buy, I messed that up. I don't know how I did that. Now I can buy 348 shares. So what gets me like irritated about our community with AMC is the folks that say that they don't want to buy and sell because they're worried about adding pressure to the stock. And I'm like, yeah, but that might be true, but at the same time, like, what did I just do? I actually bought more shares. Now, monetarily, I put more money back in as well, although, again, it's pretty small. But I actually bought more shares at a lower cost than the original that I had because I was trying my best to average down and also then exit those high positions. Now I don't have any shares at $6. I only have shares at 370s. I've lowered my floor. It's super basic math. And so you actually end up with a bigger position in AMC. You bought more share in that company than you did originally. So you've only exited 300 positions and now you own 350. So what's the net? What's the net buy value? It's not 348, right? It's 48 shares. But there's no selling pressure technically then. Now you may have added it here, but then you bought it back. So like what bothers me a lot about our AMC community is this idea that the buy and hold methodology is this idea that it has to be that way because you have to do that in order to have a short squeeze. But the truth is as long as there's people buying and selling the stock and you're exchanging it with free liquidity, which you are, there's plenty of liquidity. AMC regularly trades high liquidity. As long as there's high liquidity and you're regularly trading higher values, it's a personal choice, I think. you could easily look at this and say, well, you're adding selling pressure, but I look at it and say, no, because it's a net buy. Like at the end of the day, I've actually increased the amount of shares that retail owns and holds. And it's a temporary buy-sell order here, but ultimately, like, I own more shares and retail now owns more shares. It makes zero difference in some ways because those shares are being freely traded anyways. And we already know that the operators in this stock are pretty ruthless with their buys and sells. Like they're creating liquidity all the time, and lending out of shares and all this other crap. So it's not really about. It's weird because again, it's like this idea that you can't somehow fix your position because you made some kind of commitment. And we heard this a lot early on. I think less and less now. But this bizarre idea that you can't somehow average down correctly. And if you do it like this, again, this is like the one option that you could use. This isn't even like the only thing you could do. There's a ton of other stuff you could do here, because one other thing you could do is to not get rid of the threes and only get out of the 100 with 100, right? If it hits 450, you could scratch and keep your 3 position, get your money back from 200 of these shares. You still have 100 at $3, and then you basically just have to, as long as it hits like the average, right? So if you wanted to, you could take 100 of those shares, put them aside, and wait and get as high as you can. And if it happened to get to 450, which this may not, but if it happens to get to 450, then you would be in a different position where you've now exited that position, and you may even get a better deal down the road than doing this. But this is just a simple example of like my thought process behind averaging down. So I'm not at all like ashamed to say that I can do stuff like this, and ultimately it's still net buys. It's still more shares in retail's hands. It's ultimately like more shares in my hand if and when it does run, and I think it will. And I'm not sitting there with a $6 average groaning about how it's not going to ever get back above 6. Well, I don't need it to in order to, you know what I mean? Like this has provided everybody, regardless of your position on like what happened up here. I mean, options are options. If you get screwed on options, you lose it all. That's all there is to it. And it happens to me, you know, I've been there. I get it. You can get totally wiped out on an options trade. There's no salvaging it in some ways. But with shares only, there's really no excuse unless you just don't have the funds. I mean, that's what it comes down to. But if you could manage to scrap together any point between these highs up here, if you happen to buy at 6, which is, by the way, like above this range. I mean, we haven't been at 6 for a long time. But if for whatever reason you bought at 6 and it wasn't lower, I think most people probably, if they did buy, would have been somewhere around the average of 5, not 6, which makes this even easier to do because you don't even have to get to 430, right? You get much lower. Then there's really no excuse. I mean, so I hear people get upset about what happened here, and I'm like, I don't know. Maybe math itself is just something that people don't rely on as heavily. I think there's like really avid kind of fluent traders who probably look at this and like, this is elementary. This is like baby stuff. They don't want to talk about it even because they're like, well, why would you even have to talk about this? I don't mean to be condescending either, but I do think there's people who, when they see this, they're like, wait, I could do that. I could manage that, but I just haven't done it. And part of it's because of, maybe because of liquidity. Like I don't have $600 or whatever. I don't have the original money. It's all gone. I can't scrap together the same amount, in which case you probably over leveraged. I mean, that's another big lesson to learn, right? Is like, you shouldn't be throwing everything you have so that you have no cash on hand. That's not wise. You want to have something just sitting there on the side so that you can make stuff like this happen. Lately, I've taken to a rule of like, I'm not trading more than 10% at any time of my portfolio on any one thing, because I don't want to get wiped out. But also, I think for AMC specifically, I've been like really lowballing it. Like I won't even trade 10%. I'll trade like 5%, just as an example. So what I'm saying is like, if you're somebody that's like stuck in this position, or if you know somebody that's in this position, this is not complex. This is very simple math. I think anybody can understand it. So I wasn't trying to be condescending again. I think anyone can understand it. But I think sometimes people just need to know that that's an option. They're just not thinking about it. And also that no one's going to judge them for it. I mean, that's not completely true. There will be people that judge you if you tell them, because people are jerks, and sometimes people will judge you for those things. But ultimately, like, it's your money. It's your account. So like what I did down here was actually buy in pretty low at like 330. I didn't exit very many shares from like higher averages. I might have thrown like one or two into the batch, and I've got some that are like ridiculously high. You know, I've got some that are way up there. I think my highest average is $280 per share, and it's from August 2022. It's probably right before that big run up, and I probably just held on to them. I think everything before that time, August 9th. Let's see here. I may have more, but I have a couple accounts, but I think that's the oldest one I have now. Because I got rid of a lot of stuff on different run-ups. Again, same thing, like pairing it with other trades and just doing my best to make sure I'm not holding positions that are really expensive. But I still have a $280 per share, amount. Like I can't get rid of that anytime soon. Even if I have I'm buying at an average of $2.40, which is great. I'd have to have a significant portion in order to get out of that sale at a low price, and it's not likely that I'm going to get it. So we probably witnessed, now that I think about it, we probably witnessed some people doing that in that May run up, like operators. It would not surprise me if that happened. So my plan here was to kind of buy low, sell high on the bounce. And then I decided to break this into two sections because I figured there'd be a decent move up to about 350 to 370. There'd be some kind of a bigger pullback, which is what we're experiencing now. It doesn't have to be huge in order for me to still take advantage of the opportunity. So at this point, maybe it doesn't go any lower than 350, and I'm going to have to decide if I want to get in here or not. But considering like my positions, it's kind of like a free entry for me. Like I'm not saying I can do it for no cost. I'm just saying like I made good money on these trades, so I'm not really concerned. I have cash on hand. If I want to, I can buy from 350 and then sell at 430 or whatever I want to do if I just want to use shares. I'm probably going to do some shares if it drops down to 320s. I don't know if I'm going to buy a lot of shares, because the thing about shares is like I see them as the longer term investment. You don't have to get rid of them on the pump. So if it jumps up here, then I can wait on the shares. I can't wait on options contracts, because for options contracts, I have to have that game plan and like know, hey, once it pops, I need to get out while the volatility is hot, not after it chops for 2 weeks or a week. And I just don't want to take the risk of holding it. But a share doesn't matter. It just sits there. The price stays the same. There's no decay. There's no, tide of volatility, all that stuff. So the Greeks don't exist, right? So it's easier to trade the shares because you don't have to worry about that. And you just retain the value. So at this point, if it breaks out at 4, I've got shares that I bought low, and I didn't have to do anything with them in this time period. I could just sit on them. And if it doesn't, and if it breaks down and I see the distribution starting, then I can get out and get ready to get back in again with more money on hand, again, with the anticipation that I'm going to actually get more shares and have a greater portfolio percentage, bigger bang for your buck, so to speak, right? I just think that's basic trading. I know that that's really, for those of you that are like super affluent, you're probably like, oh, this is really basic stuff. But for those that just don't know, who may be in a bad trade, I think it's really important to understand, like, that's totally a realistic option. So if that's you and you want to do something like that, like, figure it out, decide what you need to do. You're not going to be able to guarantee anything in the market. So if you're looking for somebody to give you a guarantee that if you get out here, it's not just going to take off, well, no one's going to give you that guarantee. Nobody can give you that guarantee. It's not possible. But if you do the TA and you know that there's decent probabilities of things happening, then you decide if you want to take that risk. And I did, and I've made a better position because of it. It doesn't always work. So I'm not in any options trades right now. I'm not in a put. I'm not in a long position. I am in long-term shares positions. I have basically no more short-term share positions. I have a few, but it's again pretty negligible because I don't expect a massive run out of this. If I get some here, that's great. I've already capitalized on the first part. I'll capitalize on the second part if I'm able to. And then that's it for me. Like, I don't know what else is going to happen, but I'm not going to pretend like it's going to rocket to the moon if I'm not positive about it, and I'm not positive about it. I'm more concerned about it getting diluted again and dropping down or whatever. I'm not convinced that it's just going to necessarily take off. I think, again, we have two opportunities here. One is when it breaks back above maybe 370 up to about 380. I think that's one opportunity. And you could potentially buy in low, right now, and then also maybe at 323 if it goes down again. I'm going to check it out today and see what happens. Those are the next opportunities, in my opinion, for then upside. And then after that, we'll see. Is it possible, Booksy, that it just takes off and you're wrong and it just goes to the moon and that's the end of it? I mean, sure. It's not improbable. It's not like there's no possibility at all. It's still probable, but it has to make certain jumps first. So I'm not of the opinion that you have to make that decision right this second. I think you can make smart trades that give you some input, right? That give you some buy-in without going all in and like losing everything. Which unfortunately is something I've tended to do on AMC way too often, is like try to like get it all at once. And it's like, I don't know why I do that, but something about this stock, I guess, it's like an addiction or something. You think that you can catch those moves and make a fortune, but I've made a lot more money in the last 2 months than I had previously trying to catch the big moves. So, over time, I don't think it's the best trading strategy. Now, I am a contrarian trader, so I like to trade tops and bottoms. When it looks bad, I like to buy in, and when it looks great, I like to sell, because I think that there's a natural ebb and flow to the market in that way. And so you will see me do stuff that looks pretty risky sometimes, thinking that things are going to move really far on a particular move or particular setup. I'm just trying to be a little more picky, I guess, is what I'm trying to say. So that answers your question, hopefully, about my positions. So I was trying to clarify that I got out of those, but it's not because of me being bearish on AMC. It's just that I didn't want to hold through a turn down. Like, I wanted to get out while it was hot. And I thought that was probably the best place after crossing 350, because that's the more natural top here. And we may get an extension up to 430s to go retest some stuff. But I also know that 390 was an area I talked about as a potential danger zone. So even still, I'm like, okay, at this point, I'm really just watching. If I want to like keep this as simple as possible, I'm really just watching this white line that's going up, because at this point, I don't necessarily think it's going to go above that again. And so as far as we can go down, it's almost better, because it's going to give me more of a trade and also help me if I want to get shares at that time to get a lower average. If it stops here, it stops here. And if it jumps over, it jumps over. And like I said, if that happens, we'll probably be into today into Monday. But if it happens like right here in this 350 area, it's got to be like today into Monday. Otherwise, I think we're waiting till earnings, and we may be down low. We may not be breaking very high until Wednesday, and they'll be down here actually pushing over 350, not being above it, but being below it and coming back above it. So very different setup if that happens in that regard. Well, I'm glad I got those puts again on AMD, but so GME, kind of the same thing. Like yesterday, I had charted this out, and then we kind of had some folks. I think they were just kind of like, hey, let's look at it. But they were saying like, oh, we're running, we're popping, it's up 4%. I'm like, yeah, well, that should happen here because you had this drop that we didn't come back and test. If it does not make another extension upward, and it doesn't push up any higher than this, like let's say it doesn't come up to like 28, for example, today, then I might be inclined to kind of drop this green line down a bit because it means that it's sort of taking a slightly lower path than expected. That doesn't affect a huge amount of anything right now, but it will in the future when we come back up potentially impact where we find resistance. And I usually think those measurements are precise for a reason. This is the 1 hour 180 right here that you see. That's the EMA that's running across 27.55 down to 27.22. Those levels are going to be resistances. They were already previously set up anyways on the drop in when we came down. This was kind of like a triangulation. This is why, again, I don't ignore these things if they're clearly like presenting themselves. When we first dropped in, we found an anchor right at 27.50. Well, that's where we came back to meet, and the setups are, I usually use more geometric stuff. It's not very organic looking. It's much more like, based on like lines, triangulating and all this other junk. But the EMA was coming down and it's going to meet at the same spots. And that's kind of the reason why the geometry is there to begin with. In some ways, it's a bit of a chicken and the egg, I suppose, but you have like both of them are operating at the same time. You had a pretty strong probability that this was going to be the anchor position, and now we're in the position where we're kind of doing a head and shoulder, or we're doing something like that. It looks a little like that underneath it. I think to a large degree the 27.55 mark is going to be the breakout zone. And I didn't think we'd pass through it here. I thought we'd probably attempt to and then see how low we go. And that's going to be the question today is, are we going to go down and get the 24.60s before Wednesday? And I don't even have a Wednesday option here, but certainly it could be like slower, I guess. You could come down lower, assuming that it runs, if AMC runs on that at that time, so on and so forth. Sure. I mean, you could come down, and I think this is Tuesday evening. Yeah. So it would be Wednesday morning. I just want to make sure I was getting that value right. It's right there. Yeah, I mean, it could be a slightly slower option here that still has roughly the same effect. So I just don't know yet. I'm not sure. I think the only place it's likely going to stop, if it does stop, is at this level that we've had support 1, 2, 3 times, which is around 25.80s, 25.85 maybe. And that's where it might have an LPS. And if it can manage to do that or create like a micro spring here without going too high, so on and so forth, I think it'll be okay. Yeah, I'm just not sure yet. I feel like the level that I had was probably the better level. I don't want to change it. It's like where these candle bodies are. Let's see here. 27.52. Yeah, maybe 27.52. No, 27.51. Yeah, I think 27.51 is that number. Anyways, it's really close to 27.50, so 27.50's fine. Want to be like super specific, I think maybe 27.51 is better for GME as that number. We don't need to split hairs here. So yeah, I'm thinking that it's probable that we're experiencing something like a stronger version of what we saw over here, right? You see that push up and then the drop down and then the second push up. See how this drop down goes low and that's like weak, and then it goes high and then it proceeds to sell off. This one pushed up, it went down, but it didn't make a new low, right? And then it pushes up and goes higher and then it comes down. So it's like a stronger version of what we're experiencing here. So the level to kind of watch, there's two, but the most important one would be probably right there, 25.73. Or 25.72. So if this is going to do like a LPS, we've talked about that a little bit, then what most likely happens is it hits 25.72 or close to it, and then it does like a bounce out, and then it does like a dip and tries to get below it, but then recovers. Once it gets above, and I know I've got this kind of all over the place here, but let me move it over a little. Once this gets above the creek, then you're probably good to go. So you'd be waiting for that creek jump, and if it happened, it would be, again, maybe right at 27.51, the way this is set up. So again, not predetermined, just what's most probable and what paths are available. And that would be a fairly logical path Monday or Tuesday if it goes that direction. So we'll see how, again, it ends today. Maybe this is more compressed. Maybe it's more spread out. Don't really care that much about that. I just want to see it a little more clearly today before I make a decision. What if it just goes up, Booksy? What if that backup was enough? So the only times that we see GME do that kind of J-shaped thing, when we haven't made back tests like this, it's usually been fairly distributive in the end, and it's usually gone up pretty rapidly a couple times, like boom, boom, and then it dies. There's not that many examples of that, to be honest. A lot of people think that that might happen a lot on something like GME because it's like this squeeze-prone stock. That's not really true. Most of the advances have been fairly steady, and you guys are like, what are you talking about? Most of it's been downside. I know, but that's kind of the thing, right? It's like the ones that go up that are more steady tend to not be like those explosive, huge moves, and then they end up finding a natural resting place. But there have been, before they turn back around, there have been a few instances here of kind of that rapid fire 1, 2. That's sort of like this stuff, but this tends to not last very long. And we did the same thing back here in, I think it was June or May of last year. Boom, 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 and then it just drops. And I don't find that to be a particularly great way to move. I mean, you might make some money on it, but the steadier advances, which have happened as we cross the creek here, these have been really religiously going back to hit creek bodies, almost annoyingly so, because they were so flat and weird, but that's because they kept laying down creeks that were really flat and weird, and then it would take forever. But they were jumping them very steadily, And then I think this advancement too, even though, yeah, it's after the fact, it's clearly on weakness, which is what I was saying when it came to the top. It looked bad. That, ultimately, like, that's still a more straightforward advance than just kind of these massive upthrusts like we got back in May, which are hard to read because as soon as you get to the top and you think you're going to go, it reverses and then does it again. And you're like, well, I don't know when it's going to stop. Is this going to keep going? Or at that point, you just really have to kind of go back and look at the big picture and just see what's going on. So I think there's always a misleading element to it, perhaps. So maybe, for just to throw that in the mix, I guess, the monkey wrench, I guess it's a possibility. I don't think it's the most likely thing, but I suppose it's a possibility that this could just go. But I think it ended up being some kind of weird, like, rapid up thrust type deal and eventually just crap out pretty hard. I'd also be a little bit surprised if we didn't try to go down again, just because while this did push up, make a support, and then make a higher high, and higher highs and higher lows are good, well, all that's good. I'm not going to say it's bad. I didn't think we made a really adequate test down low. And I thought it was I think it'd be kind of surprising, perhaps, to not go down again. It'd just be interesting. Maybe you could look at it like a head and shoulder this way instead of the way I was positioning. Instead of the way I was positioning it, which is upward. So I was thinking this was still part of like a head, perhaps, and then you get a shoulder up here higher, which is usually more bullish because it's positioning it at an upward angle. So I would imagine that this was all part of like the head and shoulder motion, which is, again, not 100% necessary, but it's typical for something like this. So this was kind of my idea, that this would come down maybe one more time and try to test low and then go. But I suppose you could argue that this is like a much more, I don't know what if this is like the best way to do it, but maybe this is a much more downward angled head and shoulder, and this is really just the shoulder going back to the creek, and it's a very small motion. And it's certainly a possibility. We could explore that if you want. Yeah, it's possible. It'd need to come back above 2881, which is still like the level that, I mean, it's basically the top. So you need to see a creek jump. You need to see 2751, and then you need to see 29, basically 2890. So it's still kind of the same thing. Those are the same confirmations that I would have said anyways, because I was talking about coming back above this guy right here. So that intersection is Thursday of next week. Doesn't mean it's going to, get there at that time or whatever, but that's where it is. And that's a triangulation of sorts. So certainly it's possible that this doesn't go down again and just goes right up. That would be different, though. I'd have to measure that differently. Kind of don't like this, so I prefer to have the elevated head and shoulder, not this one. Can you have both? Yes and no. It would have to be set up a really specific way. Here's why I don't like this, because this head and shoulder only gets you, I guess I don't really care. I don't know why I'm being so picky about it. Because for me, it's like 32 is the level anyways. This only gets you to 3127. So that head and shoulder would be significantly weaker in some ways if it just goes straight up. kind of hope it doesn't do that. I know it sounds bad. GME purists won't be happy with my... I think that's worse. I think that's worse for a lot of reasons. But the main one is that it does not get you very high here at all. I'm kind of being generous too, but those head and shoulder markers tend to be pretty darn accurate in terms of like the first move. And then sometimes they don't go any further. So if that just broke out and went, let's do a quick measure on the right shoulder and just see how long that took. Actually, it's really close. The same. Still says Tuesday, which is kind of odd. It feels like it would be Tuesday, like first thing though. Is it right at the beginning of the day, Tuesday? Roughly right there. Yeah, I didn't really see this one yesterday, so I'm glad we saw it today. It's still like, it's still low. It's 31.30. I don't like that. I don't think that's long enough. I don't think that's far enough. That might, maybe that's kind of the route we go if they don't really care. If there's no, in some ways it makes sense because, actually in a lot of ways it makes sense because if you don't want to go higher, you don't need to spend as much time buying up liquidity down low to take it back up to sell it again. So it's like if the goal here was to distribute, you don't, and it just to come back above 31 or something to distribute, not bother with the gap. Or if you do bother with the gap, it's just kind of a last minute poke to check that creek. You wouldn't spend as much time accumulating because you're not going to have as many shares to offload here. You would spend more time accumulating, so create a bigger head and shoulder bottom, which is a greater cause to take you up further. So more time spent in a larger head and shoulder is going to take you a lot farther. So you would spend a lot less time here if the goal was just to get back up to the 31 area and sell off. And so you could take it up sooner because you don't need to buy in as much. And you're not going to keep it up there very long. You're not going to spend a huge amount of time selling and all that jazz up in this range. So I hate to be the bearer of bad news because it does seem like that would be kind of bad news. Some folks will probably look at that and say, well, you're being a little bit nitpicky because you're looking at an hourly chart. You know, maybe it's not that simple. You already had a, you know, maybe to some degree you had a 1, 2, 3, 4, 5 kind of setup here. I don't know. I don't really feel like it's like that, but it seems more like a correction to me, like an ABC, but maybe it doesn't matter. There's a huge amount of buying back here, that kind of stuff. Most of the volume is kind of where we're at. If you look at the heaviest volume that was traded, it sort of starts dropping off after December 27th. And so that's right around Christmas time. So most of it's right here. Majority of it that's not selling. And then we did get a little bit of a pickup in volume when we hit this bottom. But it still hasn't come through here yet. See, this is why it makes me nervous. Because if the goal is to extend farther, you're better at reaching down more than once. Maybe 2 or 3 times. Or really spending some time here. This is a very low amount of volume. It does make me think that this level's probably right, because most of your trades would be exiting from this position if they don't think it's going to advance here, right at the top prior, because that's the top of that range. I don't know. I had a guy say once, he said, in the end, isn't this all just a bunch of theory? Like, you really don't know what's going to happen. Well, yeah, but I mean, that's like saying anything is a theory. I mean, there's all kinds of things that we think are true that we can't ultimately like prove. And again, there's no guarantee. So if you're looking for a guarantee, there is none. That's not ever going to be available in the market. But there are certainly trades that are better than others. I think buying and selling anywhere, or excuse me, buying anywhere down here below 25.80 is probably a good trade. So anywhere low down here is a good trade, and maybe where we're at now, but anywhere down below 25.72 or around that area, it's probably going to be a really good trade. In my opinion, I think that's a solid trade. But if we're talking about setups, taking off sooner than later here is a bit of a disadvantage in terms of price targets based on what's been built. Not saying it couldn't go all the way up. Still, maybe it could still happen, but they seem the same. But when I look at it, I'm thinking about the angle of that ascension, and I'm reminded of what happened in August 2022 for AMC when I look at this whole setup. And in that particular case, there really wasn't any doubt in my mind it was going to at least get back up to here. Again, if it were just 1-to-1, that it would at least get back up to like 40 in this particular situation. But every single every single situation is its own beast. So you can do that comparison. I think it's a valid comparison. I think we already made a weakness, to be honest. I think we came a little too low. How low did this get at the end of the day? 24.54. It just barely caught that top. It was like perfect. All right. No, I wouldn't say that that's overly weak then. It looks okay. But that just seems like a natural reaction then. I really just want to see it, try to test it again. If this tried to go down again and it failed to come low, I'm going to be like super, super, super bullish for the next week or so. I think we'll push up, and I do think we're going to get a bigger reaction. Even if, I guess if it makes a spring, it'd be okay too, but I feel like the LPS here is like way stronger. I'm going to double check something though. That comparison. Yeah, let's do it really fast and I'll come back and look at I'm not sure if I can see it on this chart anymore. Let's go to the hourly. Maybe. Oh man, to be on the bear side of this, would be a completely different chart. It's hard to imagine. Don't overthink what I'm doing, okay? Just keep it simple. I'm really just looking at the nature of this backup because there's a lot of similarities. There's some differences, of course. This is really what I'm looking at right there versus the GMEs, which is much more flat, but it's still there. Because both of these underwent a creek cross down low, and then they push up into a double M top with a backup, which is really what I want to see. And it's got it's a shrinking iteration to the upside on weakness. And that's so, looking at the backup here, this came right back down to that previous top. Obviously, if you went back farther, it's going to look different. So it doesn't have the same kind of angle of it, but it goes back and retraces to the breakout zone, which is what happened here, which is why I took interest in this. And this is odd because it does come back through. I think one of the only things that kind of bugs me, I guess, is that this has a different. So this would have been considered like the cat ear, but then it shrinks and does the same thing again. It's the same motion, it's just happening on like a really small scale. And then it takes off. During this smaller motion, actually, most of that upside is, the upside direction is determined during this guy. It's when the pivot starts happening. Yeah, push low and then it breaks out. So I'm curious as to where this went to. I'll check this bottom real quick. I've done this before, I know. We've done this more than once. But it's a something I'm just kind of interested in right now. I want to see where this went to. Did it actually test the bottom there? Let's see, the low was... $82.82. And the high here is $82.80. It's like perfect. It doesn't come above that. It doesn't go too high. This definitely is pushing above it, but it doesn't come above the top. Part of that's because this is just different. It's not the same exact setup. It's almost like it skipped that middle and just kind of went right into the bottom. And really, maybe we're like completely wrong here. If the goal is to do it on earnings, we could be like completely wrong. I hope we're not. But what if this hasn't even made like the bigger push yet? What if it goes up and it does hit, but it doesn't go too high? It goes to like $30 and then it comes down. I mean, this is possible that this isn't even made like the bigger reaction yet. I hope that's not the case. That would look really different. What I mean is like instead it hits like high and then it comes down into earnings here. Ugh. I didn't even think about that. I didn't want to think about that. This already expanded out once, and I sort of took it for granted that it was done. It wouldn't do it again. You shouldn't do that. You shouldn't take stuff like that for granted. because the moment you do, you get screwed. And it's not impossible. Got to keep an open mind about it, I suppose. This is part of the reason, again, I didn't really want to trade past 32 anyways. So if we get a big pop, we get a big pop. That's all there is to it. And then maybe you play the second leg on its own merit. Oh, man. I really don't want to be flip-flopping. You lose a lot of credibility every time you look at something like this and you, well, I don't say we do, I necessarily do, but I hear that critique a lot, right? It's like, oh, well, you're just constantly changing your mind about stuff. It's like, yeah, well, I think the market's flexible, but what do I know? Well, if for example, AMC is just not one hour. Hour. This is a bigger setup. This lasted, well, how many days? Like 3-4 days? 3 to 4 days, and this lasted 2 months. That's a long time by comparison. Let's do 17. So that's a pretty significant integer difference. Excuse me. So it's more of a comparison to the daily, because it would be like 17 is closer to 2 days, like where it's 8 hours a day or whatever, 16 hours. So this never even got oversold. It's time for your morning stretch break. Well, and really on the daily, this is trying to push already. We'll see. It's not a good answer, but it is what it is. I can't invent something that isn't there. And so likewise, if it doesn't have the information, it just doesn't have it. I hate that I do that, though. I like really want to have a conclusion. Sometimes I'll find it like a roundabout way. So let's get rid of like kind of the noise on this chart. There's a lot of noise here. And let's just keep it super simple. Most of this noise is just me doodling stuff, making like half predictions about things. So this box, we don't really need it right now. This one, we don't really need it either anymore. So we know where that targeting is in the same range. So those are kind of extra. We don't need these little guys. They're just kind of indicating tops anyways. I'm not sure about this. This is probably just a local downtrend. I'm going to get rid of it for now. So let's take a look. Even the volume looks more like a head and shoulder than anything else, but it could change. So I don't want to ship that until it's definitely going. All right. So again, let's try to keep it a little bit simpler. So a shoulder down here, again, I'm not, you guys have your own opinions about things. I'm not going to try to make up your mind for you or something, but I kind of think a shoulder down here is a little bit more bullish to me. We'd have to kind of do it on maybe a 4-hour chart just so we could see it better. It may not be that bad, but we'll see. So I've talked about it a couple times. In my opinion, it's a more bullish option, but we're going to consider both. So one drops into Tuesday, heads back up. In theory, it could go as low as the bottom, but I think GME may take a different route and just kind of go back to this floor and not actually finish the shoulder, but then potentially just reverse. So basically it's just like a local creek back up here. And then it goes. But we think that if this happens, it probably doesn't go past 31. And that seems probable. So at that point, there's two possibilities. Well, we still have I guess there's still three. There's always three. This is an up, down, sideways kind of possibility, but each one of these is a different means to a different end. So it's not as simple as just up, down, sideways. Because like in one case, if you were to continue, it's possible that we're pumped up into earnings, right? And we're actually sitting up high, nearer to 40 at earnings, for example, or thereabouts, maybe even to be backed up by then, and possibility of going again. And I think that's, again, it depends. If you think that we're likely going up in earnings, that's going to be more likely what happens. This could take a few days, but it won't take forever, and then it'll go back up again. The distribution is really kind of, and based on where earnings is, feels kind of out of place, because it almost seems like you'd have to have some kind of a fake out here. Like, it seems unlikely that earnings wouldn't have any kind of bullish action or pivot action at all. So we'd have a continuation of action at around earnings. And then this other option that I'm thinking about is actually a larger bottom. So this has a little bit more to do with the original wave that we looked at, which was low, and I deleted it because I didn't find it to be as useful as I would have liked. Yeah, so this one is more akin to like the original wave. And it could go beyond that, because this technically goes beyond that a little bit before it turns. So it's not a big deal if it goes past it. But the idea would be, again, this is like the run up into earnings. It takes a little longer. What's curious about this particular one that I'm looking at right here is, maybe there's some kind of a really simple explanation to this. Like it's a topping motion or something. Pump and dump. But there's a third option, which I just kind of noticed, which again is not my favorite, but if for whatever reason this didn't go very high, and let's say it stops short of a top here, I mean, it could come slightly above the previous top, but like let's say it rallies with AMC, but it doesn't rally very far. It is very possible that this is actually part of like a auto reaction phase B, and that it doesn't actually move until some kind of a spring action, in which case it may go up later at a rapid fire pace, closer to earnings. So it's like a downward into earnings instead of up. I bet you a lot of people are already thinking this is probably what's going to happen. And the way that this set up a high here does make me think that's possible, because that low intersects the earnings at 24. So somebody out there wants it, whether we get it or not. Somebody out there wants 24 at earnings. It makes sense to me. 24 is the big level. I think we've discussed why and what that means on the big picture many times. On the giant chart, it's the biggest, longest traded region on GME in the last few years is at 24. And it traded across it for like over a year and a half or something. So it would be the most, in some ways, the most simple. Yeah, that's kind of twisted, but oh boy. Well, we're coming to a conclusion on this one, so if you're getting tired of hearing about GameStop, we'll finish it up. I'm getting to a place where I'm ready to be like, all right, that's it, that's enough. Because you can speculate all day, but you got to see certain things happen anyways. So if it stops short of breaking out, let's say it only goes to 29.30 or something and doesn't continue, it fails to advance. There's no holding of anything. It breaks down. It'd have to break down back through the top at like, it's really going to be tight. It's going to be like 28.70 or something. It's very possible this goes into a kind of a secondary breakdown mode. And so this could still pop with AMC and have like a decent move. Maybe it moves from, 25 up to 29. I'm still 14% swing potential. But if it then capitulates, like for example, if AMC goes all the way up and hits its target at 430, and by the time we're there, GME is just sitting there, not really moving, and it's kind of stalled out, I would be concerned, very concerned, that it's not going to actually go any farther. I'd be very concerned if by the time we're like pumped up to 430, GME is sitting at 29.29 or something. I'd be genuinely like, okay, I think it's not going to go, because if then the chop continues and overtakes AMC, we do make a move up. And we really have no guarantee it's definitely going to 430, but I'm feeling strongly enough about it that I've talked about it a lot, 4 to 430. With kind of that 390 area being problematic. I could see that being a problem, right? If it starts chopping and failing to continue. And GameStop on March 25th, oh, of course it's right there. Yeah. March 25th is around this intersection over here where we have we've kind of run out of space on the current and only uptrend we have, right, which is really small. We might hit it again if we go down to 323. But it's the intersection of that and the major creek. So you could potentially stay sandwiched between 415 and 340 until that time, because it generates, you can see it on my chart hopefully, it's like a triangular shape right here. Yeah, and you don't have to make any kind of decision till then. You could be around back to this top at like 377 by that time. So you could be here. Not really knowing where you're going to go. Especially if this does create some kind of sell-off bottom and then distributes goes sideways for a while and down. Whoo, baby. Man, these charts, some of the nastiest setups. Puts you in a position where you just have zero idea what to expect. Then it's a widening too. Of course it is. Then it's a widening as well. Oh man, look at that. It's like perfect. So if it breaks down, it heads all the way back to the floor again. Or back down to the bottom. See the widening? If this goes low to 323 and then back up, and then breaks down here, it's going to come all the way back to the floor, which is kind of what I thought anyways. But the widening comes to a head right here, and this is where things get dicey, because it's probably hit the top multiple times. It would have only hit the bottom twice. If it hits the bottom and goes, you're like, oh yeah, we're going to go. But it would be like right on that report, I bet. So this is where you have a perfect opportunity for a 1, 2, 3, 4, and the 4 being the head fake BS that happens. It's so like perfect that it makes me sick to my stomach. Like I'm actually feeling kind of nauseous, because when I think about AMC and I think about this stock pretty much every day, because we look at it every day, one of the things that always comes to mind is the cat ears and what that represents in terms of distribution. And this is like the perfect spot to have like a head fake right at that GME earnings, if you're not going to actually run it, but you're going to dump it the other way. And it would be a horrible place to do it, because you're going to think it's breaking out of the bigger creek. There's going to be all kinds of signs in here before then. We'll have about a month of generating signposts, but I'm going to guess this is going to flag down for that month. So the reason that this kind of made me stop and sit in curiosity is because that's March 26th. It's kind of far away. It feels far away, but it's not that far. And the idea of like chopping for a month seems like a lot, but we've already done it. And I could definitely see it just doing it again and just kind of boiling down. I'm really kind of nervous because of the intersection here at 24. I really didn't like this particular route. Yeah, so it would be a great place to attempt to have some kind of a bottom if you do not want to advance it up here or higher. You could hold it down low. And the fact that we haven't traded a lot makes me think that might be very possible. We haven't traded very much down low. So what does GME do? Weirdly enough, I kind of think that it could be pretty much the exact same, but just later. Like if it goes up again, it could be some kind of a squeeze still to like 40 or 32. This is still in the same spot. It just would happen, and then makes you wonder why wouldn't AMC just run then? You know. Well, AMC doesn't really have that same setup. November to January, this is generating like a directional movement, and then we're backing away from it. So if we find any, even if we just, it doesn't really matter which order this happens in. It doesn't, to me, it doesn't matter. It will go there at some point, but in my opinion, or it'll try to go there at least. If it gets stopped, it gets stopped. But AMC is a little different because November to January, yeah, I mean, it's almost exclusively here. It's really low. So the direction that we're heading November to January, I already have it on the chart. That's a very different direction than GME. Very different. So November to January is like way low. It's kind of an opposite move. It does make you wonder. Well, how far back? This goes to November 11th. This is November 13th. This is November 11th. So let's do the November 11th one to January. Ha! Oh, man. So November 11th here to January 14th. Without a doubt, high up to the 40s. But I laughed because the same area on AMC is exactly where I thought it might go. I get so annoyed with myself sometimes because I'm like, I wish I just didn't see it. It could be January 2nd or it could be January 10th. Either one might work. Yep. This is a mess. January 2nd, it's low. January 10th is like way down here. It's got to be this one. It's got to be. Wait a minute. Wait just a minute. Is there a little sign of weakness right there? Or I thought that was a double bottom. It's a triple bottom. Okay, never mind. Good. Whew. I was like, that doesn't make any sense. Couldn't be. I remember that being a triple bottom. I don't know why that it wasn't. That's directionally correct. And the gap down. So where is January? Yeah, that's probably it. It's hanging on it. January 2nd. It's right here. Well, there is a potential that it's even lower, but that's the second. I think that's pretty darn close, and you can see there's a lot of hits right there against it. It correlates to a horizontal anyways in this particular range, but there is very much a downward motion across that. I don't know. GME was going up during that time. AMC was kind of listing down. It made me chuckle because when you look at where that is, based on everything that we just drew out, it's literally right where it should be. I mean, it's just stupid in some ways. Because I was sitting here thinking to myself, how could GME possibly run to 40 and AMC just not go anywhere? But that's not true. AMC could totally go somewhere. If the fact is that if it's wedging up into this corner, trying to get towards this creek, and it doesn't hit the creek, or even if it just barely hits it, usually what we see on the distribution is the cat ear forms a kind of rising, not a wedge, but like more of like a symmetrical wedge, I guess. I know I'm jumping ahead here, but this is the way I would have illustrated it anyways. And like you can see that intersection right there going into the 25th is just brutal. I mean, it's like really, really, really tight, that pocket region. Now I could adjust this a number of ways in really just kind of determinate manner and just determine how to do that. But I think you can move it around is what I mean. It wouldn't make a huge difference. But I think this is where it makes sense, because if you have a distribution that's moving along that creek here, which is what I'm expecting, and we've currently got decent target setups at 4 up to 430, this is almost like exactly what you want to see on a distribution. You would see a pop, a reversal. So it's within the widening, it's creating like a cat ear down. It's a breakdown, it looks like a spring. And then it starts running up through the 27th or whatever it may be. It could break out for 2 days, it could be running up, or maybe more. And maybe that's the key here. Maybe it's not actually after earnings. Maybe it's before that it starts running up. So AMC could totally have already made like an SOW here by coming too low to like 350. Because everyone would look at 350 and say, well, that's not too low. Well, it is too low over here between March 19th and GME earnings. It's too low. It would be a breakdown of this trend, which exists. So like, it is too low. So it's dipping into that bottom. I don't think this is very likely. I'm going to go ahead and say, I think it's going to come down to 323 right before earnings. I think we're going to get a big push, and I think we're probably going to run from 323. This is my estimation. If I have to pick one again, I said maybe this high one. I still think that's a maybe. I would give that like a slightly higher than 50%, but I would give this a little bit more than that. And I'd say I'm going to lean towards that 323 area around earnings, because I think it's going to solidify that bottom, or try to anyways. And so I think we're going to try to get down to the previous top at 322. That's my estimation, okay? It may or may not be that case, but that's what I'm thinking right now. And the only other option here is that we kind of advance into earnings starting next Monday, and that would be like a run up with a pullback into earnings. So tomato, tomato, I guess. But then I think after that, when we go back up, we're in a situation of sideways and down. So I think we're going to come up and test these major downtrends that have provided extreme resistance. The last time we bonked our head on it, well, last two times, one was May, one was December. Long-term downtrends. It looks like AMD is finally dropping. And so when I look at that, I'm like, yeah, it makes sense that that's where you would stop and consolidate. But then even more so, if you're trying to kind of create a distribution here below, this is right where you need to do it. It's right below, I hope you can see that. It's right below this pocket that we were in before. It's the perfect place to come up and try to sell off again into the $4 top. So there might be, again, one extension above it, but then you're going to sell through it. And then when you drop, it's already generated a bottom at 390. That's right where it goes. It's right in the right spot. And that's where it's pointing to from November to, you look at that directive move here and tell me I'm wrong. That's pointing towards that direction. the intersection. And that's the same thing we see with GME, except it's pointing up. I think you could argue maybe like there's a lesser one that you could use or something like that that's not as high, that just distributes at 34. That's fine, either one of those levels, but those were already ones we had thought about before anyways. So that's like nothing new. It's just a different opinion about how high you go. That's how it happens differently. So both of these could have a potential run up here that then just chops for like a month after and then pops in March. And in some ways, even though this is weird in my opinion, it is a little weird. They're kind of the same thing. So yeah, I think that's really likely. Very likely. GME doesn't have to do anything with AMC. It's not required. GME's had moves, like I said, this was all upward and AMC was going downward ultimately and creating a head and shoulder. It did have upside, but if you look at those 2 dates, it's actually pretty clearly like that head and shoulder direction that way. So yeah, I think GME is going to go up to 40 or thereabouts. It's got to be between this top here around 34 and 40. Worst case scenario, I suppose, and this is what I was saying, maybe you could try to draw like a less steep trend. You could do this one and say 34. Or you could say, I don't think it ever comes above 32 again, and it's going to bonk its head right here. But in either case, it wouldn't really make any huge difference, but I think there's a very strong probability it's going to do a wave up here. And I think it's been pointing towards about 40. We did the math and we looked at it. It looked really clean, which is good. And there's a lot of reasons for it. It's not just arbitrary TA. There's a good reason why you would come back and retest that on the macro level, that this is gearing up for that push makes sense. And that this dropped off and it's like a 50% retracement and then goes boom, boom, 50-50 up is also very common for this kind of a move. And then the fact that it has an equal part wave that reaches towards earnings is also very common. I mean, you can measure it out how you want to measure it out, but if you look at the distance here, tell me that this is an accident, right? If you look at the distance here and you measure it right up to near earnings, the midpoint is essentially like the top of this wave. So the up-down motion, you could say, well, I think it's a wave up and a wave down, so it hits low at earnings. That's fine. But there's also an element of S-curve here. And the S-curve is an up, down, up motion. And that S-curve started down here at 20, found a midpoint at 30, and would find a high at 40. Alexa, turn off the timer. And all we're doing is really just like deciding whether or not we're going to continue the S-curve versus breaking down into maybe like a spring. Now I've got evidence that there's potential that we could hit 24, and that's where we've previously had some pretty good success. There's a lot of potential there, and there's a long-term intersection of trends there as well, and you can see it from August 5th through the 24th, but then that's a historically important level as well. So there's just a lot there that would suggest that both of those are possible. And it really depends on how you, I guess I want to say how you draw it out, but it's kind of how you, it sort of is. It's like, it kind of depends on how you draw it out. How you think that this S-curve should be drawn, where you start, where you stop, that kind of thing. I'm of the opinion, usually I use, after the breakout, I use the breakout of the breakout, which is like down here. That's typically where I go. And then I go to where the creek cross is, not the peak. And the creek cross is actually right here on the 14th. And so I'm pretty close to right now, and it's March 20th. Well, that's 6 days out or whatever from the earnings. So that's within a week that potentially you could already be up here at that time is possible. But there's a lot of space in between. And so one of the things I was like, thinking about was, well, technically this is like a double top. This could be a double bottom. The two tops between here are actually quite far apart. These are the two tops on the RSI. And so when you look at that and you consider what that might mean, again, as an estimation of timing for that wave, if this is the first top right here that we made on the 20th, it's possible, but I don't think it necessarily is, then you could be leaving as soon as, Friday or whatever, you're ready to go. But if you look at the more absolute bottom here and you consider that, look at where that lines up. The second top is actually right here on the 20th, which is the day that we're talking about in question for the bigger wave. So in my opinion, and it is an opinion, it does seem very possible that, and maybe I'm doing this a little awkwardly, but it does seem very possible that this could be down to like near 24 around the 20th instead of just kind of breaking out and going. I still think we see upside here. I don't think we just chop down underneath, because I think it's going to have a little bit of a sympathy run with AMC here. But I'm starting to lean into this a little more, that maybe we don't actually go above, or not significantly above, the top. And that might be on purpose, because you might be building out a more proper white coffee, and this is like an auto reaction, phase beat top kind of deal. It's possible you don't really need to go that high anymore. So I'm considering that as a very viable alternative to what I've been talking about previously, which is that you just kind of come up top and go. So I'm thinking that that's likely. And I don't know. From that point forward, I'm not sure. Does it sit for like 6 days, or does it run hard for 6 days to the top? I really wouldn't be able to say for sure. It's plenty of time though. It doesn't even have to do that. It could be like whatever new top is made here will generate like a new creek. And I'd bet that that's going to be like a breakout point on earnings or something. So you would be up like ready to go and then take off the next day. You don't even have to make the full distance that whole time. That's not really accurate. You just have to get up above here and get ready to go. And then you could like pop the next day or two and be done. So this little cat ear bit maybe seems like a little bit like a gobbledygook to some, because they're like, well, I don't know what that is. It's just a sell back down. It's just a walk back down to the bottom here at 24, which I don't think was adequately tested. I'm happy to suggest that this doesn't do that. Sort of like what we were talking about, akin to like the 2022 August move for AMC, where it just sort of finds its bottom and goes. But there's one thing missing here, and you know me, is that it didn't actually push higher. And I'm kind of concerned about that. I don't think it makes sense that this didn't push up above 29.20. It looks a little weak. It needs another push. But it doesn't have to come significantly above that. So I'm assuming here that, we're already in that push and the backup, but we didn't make a lower low. So that didn't happen. So if we don't make a lower low right now, then all we've done is maintained an uptrend. Yeah, we've broken like a trend line here and there, but really like we're still just maintaining like a singular uptrend, which would be like, hey, this is the auto reaction right here. It's all part of the same thing. Yeah. And then the auto reaction loses its trend line, and then you get the phase B reaction afterwards, but it doesn't come down and make like a new lower low necessarily. Go look at like a Wyckoff schematic, and you'll see what I'm talking about. It has the same structure. So this could be all part of like an auto reaction here. And this is like a little backup that's generating a little short-term support. But because it didn't make a lower low, it didn't actually change the direction of the stock at all. So it's only made higher highs, which is not pleasant to think about. You guys like, why not? Because it means that even if this like has a quick dip Monday and then it takes off, I don't know, Wednesday or Tuesday, it doesn't make any difference. If it doesn't make a lower low here, that hasn't changed direction, then this could just be a phase B top, which means it doesn't have to actually break out like we were talking about. Like these head and shoulder setups don't actually have to follow through. Now, the natural inclination is, yeah, if it breaks above this neckline at 28, you would think it's just going to go all the way up to 31. That's not impossible, right? It's not like out of the question. And I still think there's a possibility. So I'm going to leave the line there. But part of me wonders if you can pretty easily do like a fake out by just driving it slightly above and not going too far, not going above, what's this level right here? Can't even see it. I think as long as you don't come above 29.36, then you can still build this out like a range. This is coming to 29.35 for all I care. But if it sat there and then it went back down and it hooks beneath that neckline, it's kind of like a fake out, right? Head fake. And then you can just start chopping back the other way. And now it's just a Wyckoff and accumulation. It's not distribution. It's actually pretty bullish. But then you can come down and make a proper kind of spring, maybe going into like the 20th. There's a lot of maybes that I'm saying. I get that. But it actually makes a lot of sense to then hit 24 and then just take off and be like already breaking out. And then look at where the SOS is. The SOS is right across from where it should be here. In that intersection right at earnings. It's in the right spot. Very much so in the right spot. So then you immediately go, after a spring, you could immediately go into an SOS. You could be in an SOS right at earnings, right before or right after. Doesn't make a difference. And then you're marking up. And the next range markup takes you back up to the top here, around 39. So then that's where you go. It's actually pretty genius on their part if they did something like this, because you're going to get people thinking it's going to really pump when they start seeing AMC flying. And it may not be like that at all. You know, we may get 2 days of upside or something and then come chill out Friday, and then the rest of it's just history. I wouldn't be surprised if that's all we get. It's like a couple days of upside and then chill out. You know, Wednesday into Thursday, and then, you know, maybe with a little Tuesday sprinkled in. Just depends. I wouldn't be surprised, though, if it was just Wednesday and Tuesday, or Wednesday and Thursday, excuse me. This thing would have to fly. If it's just Wednesday, and it's got to be some kind of gap up and run type deal. If it's just Wednesday and Thursday, it would be a huge move. like, what if you're wrong and it only goes to, to the top, it doesn't break out? Well, I mean, in some ways, that's the exact same as GME. If you think this is a head and shoulder, then you're expecting it to go up and break out here. I mean, it could just stop short of that and like do a head fake to 390. Yeah, but then everything else changes. Yeah, it would, and it wouldn't. I mean, there would be change, but if it stopped at 390, I guess, I don't know. Anybody's guess at that point. I think I'm right about how far it goes. I don't think it's going to stop there, but I just don't know why it would. Unless they just really don't want to go over that top for some reason. But I'm not seeing any real threat there to like an operator's game. Like going up high here doesn't guarantee you're moving forward because you have a really strong support at 4. So that's like more historically the bottom anyways. So 390 is just sort of like an optional stopping place, I suppose, and would be weaker, but there's virtually no difference. And so I don't know why you wouldn't just go to 4. I guess what I'm trying to say is it's almost like, why bother, having a weaker breakdown? I don't know. It's too slow. It'd be the same thing though. I know it's a lot. Maybe I'm going a little too far here, but I feel pretty confident about this. So I'm going to present it. And I don't talk about AMC and GME like as much as I used to every single day, but I do want to see the trades play out, So are you considering any possibility where GME and AMC continue higher after the earnings? What's stopping GME from continuing past 40 if earnings are positive, or AMC for breaking 430 if they're positive? I feel like you're only considering a macro bearish outlook. Feels like a setup for a double pump to the upside. That's not true. I'm not only considering that. This is the alternative. It's been here on the chart the whole time. I just haven't been talking about it. So an alternative path is very much like I already drew out. And I didn't know that this is exactly where their earnings was. I just had it marked off for other reasons, I think. I don't recall why. But yeah, if it breaks above this creek at 4 and holds 4, then it's going to go. It's very simple. I just haven't covered it. No, I mean, we've talked about it before, but I haven't talked about it today, so you're not wrong. You're right. I haven't talked about it today. But yeah, it's on the chart here. I'm just looking at bearish macro because I don't believe that it's done. Like, I know that there's a possibility that it just keeps going. If that happens, then I'm really not looking at, I still wouldn't think it's going to just rocket to the moon. My interpretation of a second pump would be a pump up to 5. So a GME pump may take AMC from 4. If it's up here and builds a support, then that's fine. Like, that's what's happening. But that's what I've been talking about with I did a lot of talk about the trades earlier, and I was saying that, like, if you're planning on swinging this up, the shares can be used as a way of understanding, like, a longer position for the potential that there's a second move, and you don't have to make a decision until this particular time. So it may seem like I'm being overtly bearish, but that's not, I mean, I am. If you're going to give me like a one or the other kind of option, I'm going to tell you, like, I'm more bearish than bullish on AMC and GME right now. I just am. And it's not because we're down. In fact, when we were coming down, I was feeling really bullish about coming back up and retesting these levels. It just has to do with the way this setup is built. And this to me looks like a back test on the range at 4. And it would be weird to come all the way back up to 5, but then again, it was weird for us to come all the way up to 550, which is like the top of this range. So weird things have happened. It's usually that this is a back test. So this would make the most sense as pushing up to 430 at most, and then breaking down at 4 because you're testing the previous floor. And I don't think there's any reason for us to go any further than that right now. And I'm not really seeing from a technical standpoint an argument for it either. The 4 hours already massively, it's not massively overbought, but it's already become overbought previously. Yeah, we've seen AMC do some crazy stuff on high RSI where it's just kind of rocketed to the moon. So I'm not going to say no. I think it's not possible. I'm just of the opinion that it's not over yet. I had a couple conversations maybe 2 weeks ago with 2 different people, and both of them were sharing the same thing. And they were sharing that fractal that everybody talks about, the 2021. And I've used it too. So I don't want it to seem like I'm against that. I'm not against using it. This to me is not that complex though. There's a very simple, straightforward kind of answer that I have for it in some ways. And that is that we don't see the breakdown on AMC until here. And that's really where it loses the range. So the range itself being built around 4 to 415, that area, there's no real breakdown until this area where this could have and was, I guess, at the end of the day. This ended up being an LSPY, right? It came a little too low and then it just chops back up until it distributes. What's bizarre is that it chopped up above the creek and then breaks to the top of the range. That's like a change of character typically, and then it obviously changed character again. So it was like a rapid double socket punch to the face for bears and bulls, because bears and then bulls, because first it was like, crap, it's going to distribute, it doesn't look too hot. But I thought, it's going to break the creek and maybe reverse. It could be a spring. Where, we talked about Stockfather. He had the opposite. He said, well, it could be a spring, but I think it's an LSPY. But as soon as it jumped over and then it held that support and it double bottomed or whatever and did that triple bottom, I was like, it's changing character. And he was like, yeah, it's changing character. And both of us were in agreement. It's going to go up to the top. And it did. But that's very unusual. Like an LSPY is almost always just at the bottom of the range. It very rarely comes up more than 50%. And we came up and went through the entire range. So here's why I'm bringing up that 2022 thing. Because if you look at the 2022 model, I understand where people are coming from when they think that this is like what happened in November and December, and they're like, oh, well, then we should have a January run. Well, we're not in January anymore. We're in February, and we're still low. And some people are like, well, it doesn't matter. We're about to break out and go to the moon. And I'll say this. It's not impossible, for sure. But when you look at the setup, and you're just looking and counting fractal numbers and all that stuff, what you don't always look at is what was happening in that range when that happened. And there's a very distinct difference between what was happening in that range versus what's happening in our range. Now, in 2020, in that November area, when we pushed back up, we were going back to retest the top. So you have a macro range there, a big picture range, and there was a bottom area and a top area. We have the same thing right now. We've got like a bottom area that we haven't barely revisited. We've finally come back down to revisit it now. We're still not as low as we could be, but maybe we will, maybe we won't. We don't know yet. And then the top area. And we did not lose the top area here when this dropped down. We stayed in that range and did an LSPY, then dropped it. So what I've been talking about is that I think we're missing like a check. Now, is it possible that check results in some kind of a terminal action? This is like a terminal action. It comes above 4 and holds support. Sure. But how in the world could you possibly say that with certainty when we know that after breaking down into the lower portion of the range, getting the gap fill, which we didn't completely fill our gap, but we got really darn close this time. It's the exact same place in 2020 that happened before November when we dropped the range and then we went back up and tested the range. So there's a problem in the assertion that it is one-to-one. There's a lot of similarities, and I totally get it. And I've actually drawn that conclusion too, that, hey man, they're pretty similar, you know? Like maybe this is that same area. This is what people will do. And they'll say, well, this is that same area right here, and we're about to go into a spring. Yeah, I could get why you would say that. I totally understand it. But the problem with that is sort of, in a lot of ways, it's kind of self-explanatory. Because this actually stayed within the entire range the entire time. So my issue is that this never left in the current time frame, and that made me change my mind and say, I don't think that I'm right about that, because it really didn't break down. Even though this is weak sauce and it doesn't make a lot of sense to us and there's some problems with it, I do think it's more accurate, and I know it's weaker, but I do think it's more accurate to sort of push this backwards and say, yeah, I think we haven't actually back tested because we never broke down until here. We're missing, and then this is of course where, if you look carefully at 2020, this is where the gap filled right here around that earnings report. And once that gap filled, it bounces back up and it checks the upper 50% of the range. So I'm like of the opinion that that's kind of as simple as it needs to be. Like it didn't break down until recently. It just hit the gap. We're really going back up to retest that previous floor. Like that's what's really going on in the wave count here in terms of like motion. We're doing this, right? And this did go up pretty far, you know, and so maybe that gives you the argument that, hey, I think it could go potentially beyond 4. It could go to 5 and still be distributive locally because, yeah, technically this went almost all the way up to like 50% in the range. So sure, could it have a double up thrust here and go up to 4 and then push to 5, which is kind of like the middle of this range, or 490, 485, those numbers again? Sure. There is evidence that that could happen right here, and I've kind of kept it on the chart. I'm not shying away from that as a possibility for like a high extension. So certainly, yeah, down, up, then down, and then up seems very possible. However, there is something else going on here that needs to be mentioned, and that is there's a very important creek body right here. And I don't necessarily think, I'm not 100% positive, right? I don't necessarily think we're going to break it right now. And I don't know if going up to 5 would break it. But if it would, then that could signal people to buy in a way that operators wouldn't want to do, right? The other issue with going up to like 5 at this particular time is that flush would be potentially very, very ugly. And I don't know if it needs to go that high. So I'm just of the opinion that it may not. It may only go to the creek. Do you understand like where my logic is? I'm not saying it can't go there. I'm saying that this seems the most likely because that's where the creek is. If we happen to jump back above and break out over the creek and get above 4 and hold, and that happens into GME earnings, it's not what I've drawn here. It's simple. It's like, oh, that's not what you drew? Well, it's more like this. Well, then it's probably going to go up again. So absolutely, it's possible. You know, and I got the same thing on GME right here. There's a possibility this comes up and it holds and then it breaks out again and goes again. I mean, I've got it on the chart. 1, 2. So I'm not of the opinion that it's not possible. I'm just looking at what maybe gives you a greater cause to go up for GME. And I think that taking it down low again would build a better cause. It just would. It's not that, again, it's not that this is not possible. It could do that. Maybe this is like a 1, 2, 3, 4, 5, and the 3 is pretty good, and it goes up to like 33 or something, or 32.5, and then the 4 is pretty long-winded, and then it's an extended fifth wave that breaks out and runs up to earnings, or whatever. It's on the chart. The reason that I think it's very likely that they are not going to do that is because they're generating a lot of interest in 24. And that makes me think that they want to go, somebody wants to go, I should say, I don't know who, because it may not be the lead operator in this case, the alpha. It may be somebody who's a bear who just really wants to get lower, or a bull who wants to get lower to buy in. But there seems to be a drive to try to drive it to 24. I don't know if they're going to be successful in doing that, but they know there's a liquidity shelf there. So if you're going to take it off and go to the moon, or as big as this move is, not really the moon, then sure. But do I think that it could go to 40 and then keep going? I think that's a different question than could there be like a double push here? Because I think the first push is to the creek for both of them. And the creek is not at 40. The creek that we have right now is at like 31. So there's not really anything else beyond that analysis that needs to happen just yet. Like if AMC has the push up here, 390 might be a problem, but the creek's really from 430 to 4. If GME pushes up right now, 29.30 might be a problem, but the creek is not that high. It's up here around 32. So both of them would have to break the creek earlier and then continue up. And GME especially would have to break its creek very quickly and then continue up. And it ultimately doesn't measure out that way. It measures out like it's not going to potentially be up there until March 20th, which is right around earnings. And it kind of begs the question, like, why would you then think it's going to go up to 40 and keep going way before then? Like, I don't think it would. Now, if you think, hey, I think it goes up there at 40 before earnings and then breaks out again and goes way higher, well, then we can have a different conversation about that as well. But I would suggest that, again, there's not really any precedence to go way beyond, at most here, like 55. And that's not going to rub a lot of people the right way, but I don't really care. It is what it is. And even if it did that, it's still like a pretty significant move. I think it would have a significant sell down afterwards. There's just not a lot of precedence for it. Maybe 59 at most, 60. I'm happy to be wrong here. I'm happy to go up to 60. Don't get me, guys, don't get me wrong. Okay? There's nothing wrong with that. But from a technical standpoint, really the distribution level is at 45. So anything beyond that, it's like a bonus. And frankly, you could distribute as low as kind of where we've already hit, which is at 34. So the fact that I'm thinking it goes farther than that says a lot. I mean, I'm already thinking it's going to be strong enough to push that. You may not think that. You may think that I'm being a little too careful or cautious, but I don't know, man. To me, like that's the halfway point right here. And so going up to 42 makes perfect sense, but going way beyond there doesn't make sense to me. And this is where somebody says something like, you can't predict a squeeze, Booksy. And I say, no, you can't. But, and I wouldn't necessarily try to, but on the big picture, there's not really a precedence for it at this point to continue this run if you can't get past this resistance up here at like 42 or whatever it is. It's already come up multiple times to this top to sell, and you know there's going to be bears waiting to jump in. Market squeeze, sure. Anything technical beyond that, no. I think it's going to sell down towards June and May and June. And I think it's left plenty of reason to do that, to come back low. It may not go this low, but I think it's left a lot of reason to come do that. And for whatever reason, I guess, when folks look at my chart, they kind of assume that I'm just like perma-bearish or something. I'm not perma-bearish. What I'm looking at specifically for AMC is what happens when it comes down. And historically, after doing this kind of a distribution setup, we typically try to push low, or not distribution, but like after this particular setup builds out, we try to push low. There's just really not a lot of reason why you wouldn't. I don't know. Unless you have a liquidity thing going on where you just don't need it. So I can't speak for other people about their TA. And I know I've drawn this diagram probably hundreds of times. But I can't stress how many times I've drawn this. Like, there's different ways that this builds out. It's not always the exact same. Because sometimes when you get to this point, you're going to go down for a spring and then break the creek. And then sometimes you have an LPS, and they're different. That's all there is to it. So, you know, I don't see it as contradictory. I think problematically they accomplish the same things, and you're really just looking at what's already been set up to help determine whether that will or won't happen. So how is this set up? It's set up low, you know. I think it's setting up like AMC wants to go low. Have I ever changed my mind about that? No. I haven't. I wish I could say that I have, because it would be nice if there was some kind of a change here from like what we've seen previously. I think this is setting up a big drop that's going to be the end of it, and then we're going to leave and finally like hop these creeks. We're doing it in its own fashion. Now, I could go on and on and on for years, and I have literally for years charting this thing. But we know a change of character when we see it, typically on AMC, and if it happens, I'll let you know. Because there could be a number of things happen right here that change my outlook. But until that happens, like, I'm just going to chart the way that it looks. If I looked at this chart, here, let me turn the stuff off. If I looked at this chart, and I was like, hey, I don't know what's going on here. Let me do it this way, actually. Let me just do it like this. I know I have a messy chart. I always have to do this when I'm trying to illustrate like an idea. Gosh, I had a lot of noise on this chart, man. But a lot of these are really important, so I'm not going to get rid of them forever. But if somebody showed me this and they said, well, what do you think is going to happen here? I would say that what seems very likely is that this is going to push up and test this top at 4 and then probably continue. Why? Why do you think that? Again, just showing you the chart because of this, I would just say, oh, that seems very likely that it's going to come back down. Well, but we could just run, right? I mean, it could, but in order for it to run, it'd have to break out here and then break out again here, right, at the middle of the previous range, right, at like 5 or like 485. It's really like 485. So unless that happens, I still think it could go down. So I mean, like, there's a lot that would need to happen for this thing to continue to rocket. And unfortunately, that confirmation is like way up high. Yeah, but that's not, yeah, no, it totally is supported by like everything. Because if you look at the cat ears that we established on the way down, well, I wouldn't even say the cat ears, because not necessarily what the best way to describe this. But if you just look at that creek that was established from the June top here to the December top, it's almost painful because you realize that this could come up all the way to 520s and still not break out. And it's frustrating, but we had talked about how high and flat that was for a while. I mean, it's a really bad deal for us. So it has to come up really far and break out here really high in order to go. Well, what else do we have to look at? Again, I would look at it like I just drew that diagram. I would look at it as like, all right, well, you know, we've got a maybe a potential cat ear here, and that could be it. If it has an LPS, it should come back above and find support here at 4. But then if it does that and continues, you could even see it kind of invert here and come back down and retest the floor again. There's just a lot of like what if questions obviously about that. But sure, like this could be as a way of drawing that too, frankly. There's so many different paths to take. I think the simplest answers in this particular case are usually the best. And so when I look at this, I'm like, okay, it's probably going to come back up, test the 4s, and then it's probably going to come back down and go back to the floor because that seems the most likely. And if we were to come back and do like a 50-50 from here up to, I don't know, wherever we think it's going to hit the top, it's probably going to look fairly straightforward. That this would be like a wave across that breaks down. And it's just a back test on the range. It's not complicated. So I look at that and I'm like, it's just a difference again between a spring and an LPS, right? And an LPS here would be, this is actually more similar than what happened in 2022. An LPS would be the way this is set up, I guess it would have to come back up. I don't want to say it's going to be perfectly symmetrical, but it actually kind of needs to be fairly close because this doesn't have to come too high too fast. It could come up to like 480 and then drop back down to this floor at 350. Because unless it checks it on the way out, 350 is going to have to be tested. Because it represents like that lower half bottom. And so does 408. So, I mean, it could be tested on the way out, but at some point, this is going to be tested. Maybe that's your May, June run kind of thing. I would believe that as a possibility. Like it generates like a new creek body that breaks out May, June around $4. I think that's a possibility. Yeah, I think so. That's how I would see like an LPS working, and that would be like your SOS right here. So it's not really that complex. I mean, to me, it's like the exact same thing. One just goes into a spring and one doesn't. Like, there's like no difference. Does AMC usually go for the spring? Yes. It just does. And I don't want to, again, beat on a drum here over and over again, but there's almost no creek, I should say, that really supports. This one may be the closest right here. That definitely could support the idea that, well, maybe we're not going to go down for a spring. This is probably the only one. I've seen this one before. We used it before. And that could be enough, you know. And I'm going to say this again, but again, if you actually look at what happened in 2020, this is basically it. It does catch a bottom like this. There's a cross trend between the whole downward motion. There's a wave, and that wave is eventually met on the very bottom and hit and then takes off. So I don't think that this is impossible. I definitely don't think it's impossible. I just don't think it's as likely to happen. So that's why I've talked about it as if I don't think it's as likely to happen. Neither of these is bearish, really, in the end. They're both very, very bullish in the end. One of them just takes a different path because it needs the liquidity and it's going to go low. So I'm saying it as a form of caution that when we came up here and we were talking about whether or not this would come back down, one of the things that I talked about a lot was liquidity. And I said, I really think that we're going to go down to get this liquidity because we didn't trade it. And I had a lot of people very frequently telling me they didn't think it was going to go low again for a number of reasons. And I just don't get exactly where that comes from, because AMC has frequently proved us wrong. Whenever we think it doesn't have to come back, it's just constantly like, no, we're coming back. You know what I mean? And I'm like, I just don't get where that comes from. Why are we still thinking that this is not likely? It doesn't make any sense. And there's still people out there, a lot of people out there, who just look at it and they're like, I don't think that's going to happen. I'm like, well, that's fine. But probability says that this is what's most likely going to happen because it's happened repeatedly, numerous times. And so I'm like of the opinion that this is more likely. And therefore, when I had the other chart up, I'm talking about that rejection here, not a continuation. But like I said, even if it went all the way up really high, all that's required is that it sells back down beneath 4 and not recover. And then you can still have essentially like the same motion, but later. And that's kind of the one that I'm like the least, I mean, it's kind of like my least favorite, but it is very much a very difficult one to, a difficult pill to swallow, if you want to say that. Like it's one of the harder ones to understand, is like the high push followed by the drop through. So there's just a lot here. I think there's a lot of reason. And I think mainly it's basically just the liquidity. For the desire to come back above here would be for liquidity purposes. Or the desire to come back through 285, for example. And that's a better way to understand the market anyways. I mean, is if you think about it in terms of like, hey, either of these is possible, it really just depends on what liquidity is available. Then you're not going to be surprised when one or the other happens. You're going to be like, okay, you know, cool. you know, it's just not a big deal. To me, this is like a really regular, like widening breakout that doesn't have a lot of oomph to it. It's just kind of there. It's like, oh, it looks like a widening, right? And it is. It's a widening spread. But it looks to me like the green path like misses something, because if it's just a widening breakout, you wouldn't expect it to just stop at like 950, 530, 590, right? You'd expect it to keep going. What this does is it gives you like a topping action followed by a bottoming action. So there's a consistency to that, in that there's a spring motion in the end, right? And it doesn't matter if you want to use like this kind of wider, or if you want to use this and say like this is more of like the double topping action. Either way, I mean, they all kind of hit the same points to some degree. But this idea of like I'm pushing up or I'm pushing back down and generating like a double bottom is kind of a twofold thing, right? From a technical perspective, because you have the double bottom area being retested that we tested in April, but they also have this conceptually where it's hitting twice here and then here. And that's pretty normal for AMC. I mean, again, not saying that it couldn't be something else, but again, it's pretty normal price action. Like, there's usually something like that. Like, here's a double top, and then when you get to where you're turning, there's a double bottom setup, you know. Even when it's not good, like this is where the breakdown was, right here on this one. Like the double top, and then look at the reaction with the attempted double bottom, right? Like to come back down. I don't know, man. It's just normal stuff. I don't find that to be particularly confusing. It did it here as well. And this one's very much like symmetrical. This one pushes up higher, this one pushes low higher. Like, you know, they're not always the exact same, but so I don't find it to be with I guess without the character of AMC. It feels very much like this is the character of AMC to do those checks twice. Even on the bigger picture here, and I just did the little one, but like even on this bigger picture, if you look at the bigger move, even the bigger picture is like a reflection of that same concept of the wave top and the wave bottom being built from dips. So the main reason that I'm like, I don't really know if I believe in the idea of a LPS here is because this is really the only time we see something kind of like that, is like right here. Exclusively on AMC. That this is like on the big picture, this is the only time we see something like that. Every other time there's like a liquidity dive, and maybe this one right here, if you want to count that, since it did jump the creek and push up, but without having like a deep spring in this lower range, that would technically be an example of one. But it's also not really a white coffee in range, so yeah, but I'm not buying into the idea that, I know like why people say that, but I don't buy into the idea that this is this. There's similarities there, and I've actually went through an analysis on that and talked about it, and there's certainly possibility that you, from a fractal standpoint, could you use that? Yeah, sure. But why? You know what I mean? It's really like, if you're talking about that, you're just talking about this green path, because you're basically saying this is going to be a push, kind of like the last push here, and then you're going to back up a little bit, which is what we're talking about, and then go into a SOS here, which is really no different than just saying it's an LPS. It's literally no different. The problem I think I have with that is like kind of leaves you in the dust afterwards. Because if that's the January move, you're really using that as like a model for breakdowns and so on and so forth. Then what the second move would yield is all it would yield. Like that would be the end of it. So you might say, oh, it's going to go up and hit $15, but then where is the next move? Doesn't exist. Now you're going back into distribution mode if you're using fractals. So if you can take it, if you want to take it, but then the rest of it you better have it on your chart, you know what I mean? Well, that's fine as long as you have it on your chart and you're telling me that you think that's it and then it's going to come back down. And I mean, from this vantage point, you'd probably be saying it's going to come all the way back, maybe even below the floor again, because what this did is it went below the original bottom. Be like right there. Everybody's gonna have their opinions. I mean, this isn't a completely bad opinion. Like it's just an opinion. I wouldn't say it's like impossible. I do think that this is one of those situations that, again, like the market's trying to take it to $1. Right there. So is it possible? Yeah. But this is distribution. I mean, this is an up thrust and a UTAD. So you're abandoning the curve, basically, like the wave. That would be the conclusion, I suppose. Would be we're losing the bigger kind of setup. It'd have to be, because then there's nothing else there. It turns into something very different, obviously. Maybe like a wedge. Yeah, maybe. Now who's being bearish? Because this is actually like way more bearish than I am. In a lot of ways. More ways than one. This is like, you're thinking it's going to pop to 15 and then go down to 1. Which is really similar to what I said a long, long time ago. But bankruptcy. Maybe it doesn't have the huge drop from ape. Well, if it comes down to it, I wouldn't use a fractal anyways, because really what we're talking about here is the same thing that we talk about all the time. I would use like the simplest form of this, which is just the cat ear breakdown. You're just saying distribution. And there's nothing different between that and what we see here. It's just the perspective of how you want to draw it. Like, this is the exact same fractals, so there's no difference. This concept of ABC, ABC, ABC kind of stuff is kind of more accurate than the idea that it's following some grand scheme that is much longer than that. But it's really just talking about something very simple, which is like top. It's a top. It's a top. Versus it's a bottom. It's a bottom. So when I look at something like this and I think about what you guys are saying, we're really just talking about, again, like we're kind of talking about the same things that we always talk about. Because if you look at the big picture setup as a series of cat ear type developments, then it's the same schematic that I've been drawing for the last like 3 years or whatever, or 2 years. And what we're experiencing now would be best described as just kind of like a potential spring and or something else. So one thing that I don't fully understand in this particular, we're just looking at it. Somebody suggested this idea that this is really weak and it's only going to go to like 15. One thing that I wouldn't fully understand here is why, if you've made a bottom here, why go up higher to drive the price lower again, unless you're going to stay low. There's not really a lot of rebounding from that. I can understand it from the perspective of like, hey, we need a phase B bottom, and then we go into maybe a spring mode. That kind of makes sense to me. So like a terminal shakeout of sorts. But this would be like a pretty major weakness also, because it would definitely signify the possibility that this is never going to come very high at all again. Now we're looking at 2027 as a potential for maybe we get back up here at best. But I think you'd even be able to argue that we don't ever even get there. We get to like 34 way out in 2029. I mean, you're really talking about a distributive model because if this makes a lower low, that wouldn't work. If it makes a higher low, it'd be just like a weird LSPY, basically, because it's trying to push back up into the range and it fails. So I don't know why you would look at this and say that could still be bullish. Because if it doesn't come down for a spring and then reverse, and a lot of what I've suggested is it hits like 19 or something, and then it does the same kind of setup that we had in 2000, and this is largely what I've said. It's almost the same, except it doesn't come down again like that. the reason for that, it seems kind of obvious, I guess, is because if this is indeed like a bottom, then you would have some kind of localized spring, but that would signify like a jump back above the floor, which is over here, and then you would leave from the floor. And then that's where you get the second burst, and that's where it jumps the creek, so on and so forth. But to declare that you think it comes back down is a very tricky proposition, because especially if it did come and make a new low, because it's a not coming back above this top. While it doesn't necessitate that it's an LSPY, especially if it didn't make a higher low here or a lower low here. Like, for example, if this stayed a... Man, this is where it gets kind of tricky pretty fast. I'm going to get rid of some of this other stuff just to keep it simpler. Especially if it stays below a certain, or it stays above, excuse me, this floor here. I just would read it very differently maybe than you're reading it, because I would look at it as there's a desire to not trade high again. So this is essentially what we've been talking about from the standpoint of really like a constituted double bottom that reacts and comes back up. And then you actually have a reasonable experience of like, oh, we jump above and yada, yada, yada. It's kind of a reversal to the, and I think Roaring Kitty said something about this too, as like a reversal play, like May, January instead of January, May. And I would agree that that's roughly what it would look like, because that's where it should be. And it's in the right spot for it. Timing wise, it works really well with, we've talked about this, with like macro advances in the waves. This wave up, wave down, wave back up certainly works. I don't see that as a big question in my mind. I think it's been there, and you guys know this because I talked about this a lot. So I don't want to go any further than that. Then just say, yeah, I've talked about it a lot. It's there. I think it's a very possible, strong possibility. So this is like a creek, an M cross that jumps up. And what you're suggesting is more of an M cross that crosses down, which is not normal. As in, if this would be like an auto reaction with like a phase B top that could then go on for years. And then you really don't know whether or not it's going to break out. So when the stock is bullish, it makes a bottom on this side, and then it breaks out, and then it holds, and then continues. That's the bullish price action. And so we're sort of saying the same thing if you think it comes back down and it doesn't make another low. But usually when it's that bad, and I'd have to draw like a steep creek or something for it. Usually when it's that bad that the second breakout comes higher but then comes lower, that's, again, it's more like a bear flag to me. Like, because you've probably at this point, which would be have to be the case, you'd have to say that that was some kind of a, I don't know, something. I'm not sure. Like, it's just a flag breakdown is what it looks like. And that is a bearish price action. And so you're not even at the floor yet necessarily. There's no guarantee that any of these is a floor. You have to make a new floor. So the idea of like a double bottom doesn't really work. What you could say is you could say it's a phase B top and that you're creating a new phase B bottom, which is kind of what we were arguing before anyways, because I was saying like, well, then this is a phase B bottom on the big picture. Therefore, you'd be creating a phase B bottom on the small picture in a similar way from an iteration. So if you take it from that point of view and you just continue to do the same thing over and over again, that could be true. I mean, this is something that has happened to us. That's why I said it might form something like a wedge, because when it's really low and it fails to break out, you start having to count on micro iterations until it reverses, because this is more typically going to form out into now what we call like that beak. This is almost always how it works, because then what you're really doing is you're generating like new creeks that are also steep, and then that creek ends up being steeper than the one previous. This kind of thing starts happening, and then you get these really nasty rising, almost like they just look like bear flags, but really they're just continually creating steeper and steeper and steeper and steeper creeks. This is sort of like why when you said that, my immediate instinct was, oh, so you think this is going to iterate over and over again until it doesn't, which is essentially like in terms of like a downward motion, because that's what this motion is. Even if you take away the gap and you use that chart that we use sometimes, it's still downward. Like this is still below the previous floor. It doesn't change the fact that it made a new low. So you're essentially saying that you think it's like going to continue to do that, then it's going to continue to be, I mean, it just is what it is. Like this is the pattern that forms because of that. And we've seen this on the micro level. This happened recently, as recently as September. And I think it happened even right before then, but there was that one in September that went down this way. So that's my concern with that kind of thinking, is that, okay, if it does that, all that's required is that it breaks this trend. I don't see it as necessarily this is going to be a bottom. Now, there is the argument to be made that, hey man, well, if it's an auto reaction and it does have like a breakdown, but it doesn't make a lower low, well then couldn't it still be that this is a phase B top? And I'm like, I don't know. Did it come too high? I think it did. I think it came way too high. But I guess that's an argument that we'd have to step into and decide where the top of this is, because I think it went above the defined top, which was at 1120, which means it's pushing resistance or it's distributing. If an auto reaction comes way above where you would define like that floor, that's not really a good thing most of the time. So it's either that this is going to be bullish and continue at some point, or make a bottom and continue, or it's distributing. So I don't know. There's a question there. But I guess you could say like it's possible that this is going to be a long-term Wyckoffean range, which is going to look like this. Sorry, I messed it up. Where you have like a bottom and it generates like a phase B bottom and then a new top. Kind of did this out of order, because usually it's like here, and then there's a phase B bottom, and then there's a spring, and then it jumps the creek, and then it goes to the SOS, which is at the top of the range. So that's the situation of, hey, we're going to have a long-term range down here. And in this case, it's just very similar, but the difference is that the iteration, I guess you could say, it builds out quickly enough that it doesn't end up with some kind of massive sell down. Instead, it just ends with something like that. So if we're using like the same markers, I guess I should use the same markers. So one of them turns into like a beak and just starts selling down like super hard. The other one does do that, but it does it on a more relaxed scale, and ultimately becomes like more of like a spring bottom for that range, as long as the range hasn't like completely screwed up. So this is a possibility. I would argue that this is possible here. I just don't know why we'd need to do it personally. Because this was a 10-month range and it had plenty of time. And this is already like approaching that same amount of time on the bottom. And just like, why do you need more time? What are we trying to do here, you know? What's the cause and effect build up here? I don't know. It seems really high to me. So yeah, I wouldn't say it's out of the realm of possibility, but this is ideal for cross-ups. I suppose both are possible. I shouldn't say it's not possible. But man, if we started to do that kind of a breakdown pattern here, I would be pretty annoyed. Because there's no telling how long that takes. I mean, it could take another year plus. And then we still have to deal with the possibility of a spring. So it's like a really brutal setup. I'm happy you shared it with me, actually, because I think it's important to recognize that, yeah, I mean, if it didn't break out here, then I think that's probably right. You're probably going to go into a really nasty like sell period. And I don't know. We'd have to see. It would be really bad. And we have talked about it to some degree. We talked a lot about that pivoting motion and how sometimes this represents more of like a middle on a low. And I don't even want to get to that point, but if that were the case, I guess you'd look at it as a wave across. I don't think we'd leave till 3031 or 2031 or something way over here. You're like, it's not that long. Nah, because if the desire is to really build out that slow, it kind of spits in this face like that this doesn't really matter anymore because this particular wave should end a lot sooner. But if your idea is that, well, it's got to go down to $1 or if it's got to go into a phase B, because I mean, that's like super low. But geez. All right, give it take a few days. It's not like way off. If you go to the jump here, instead of using the trend that I've been using, which has to do more with the breakdown. But, you know, there is this one. It just takes into consideration the split, though. I mean, this one really is about the angle of ascension on the overall move. I mean, it's just different ways of doing the same things. So but yeah, I suppose it's possible. I just don't know what the heck this would be, you know? That's a really bizarre move for this stock. hate this. It's like, it definitely looks like $1. It just does. I mean, sugarcoat it, I guess, if you want to sugarcoat it, but to me, it looks like $1. That's a terminal spring. I ever saw one. Blip, and then it just goes like straight up. Because it'd have to. It just does. The next action has to go back, and it just has to. I don't know. You could have said the same thing back in 2021. It wasn't that long ago. The company's financials have done nothing but improve since 2021. So if we're going to argue that the company's financials means it can't go to 70, then we should have been saying that back in 2020. And if then the argument is that, well, really it was because of the ape thing, or it was because of the apes and all this stuff, I'm just like, I'm kind of over that. I don't think that that's a big part of it. I genuinely think this is fairly straightforward, that there was a lot of bullish inclination towards doubling the value of the original all-time high. I think this is an accumulation range. People want to make it sound like it was going to go to zero. People were trying to short it down to nothing, but it's a why coffee and accumulation. There's a huge hike in institutional buy-in and volume down here. I mean, there's all kinds of stuff. So like, we could argue, I guess, that this is not going to ever go to 70, but the same thing could have been said back here. I mean, it was there as a technical that probably seemed unrealistic to most people, and then it happened. Now, it doesn't mean you can't have a situation where it could happen and it doesn't. Of course, that'd be bad logic. But to go back in time and to look at this and suggest that this wasn't already cooking doesn't really work for me. There's just nothing here that would make me think that it wasn't possible, and I just don't buy into that. So when I look at the setup as it was, whether the LSPY is back here, and then that setup with the buy-in and all that, and the jump over the range, like everything's kind of where it should be. It's just a huge, huge, huge move. We have diluted a lot. Yeah. But dilution is more like at this point, yes, because of ape and some other things. Yeah, like there's a obvious difference in like opinion about what those things might mean, so on and so forth. But dilution itself doesn't have to be an evil thing. It just depends on why it's being done. If a company is diluting because they have bad cash flow problems and they have no other way of raising cash, then usually that is going to hurt them over time if the company can't turn around their financials in the meantime. So like, yes, there are plenty of examples of companies out there that just all they're doing is raising cash to try to deal with debt, and it is bearish. And I think that's not a good thing for AMC. The fact that he's spoken, and I'm talking about the CEO, about, hey, we can totally become profitable even if the movie industry doesn't recover, that to me stands in contrast to this idea that he also said, which is we can't survive if we don't have the ability to offer shares. So on the one hand, he's saying that we can be profitable without things going back to the way they were. And on the other hand, he's saying the way things stand, we're going to go bankrupt. And I'm like, what is the deal? You know, I'm getting very mixed signals from him as a CEO, which is probably why a lot of people are just sick and tired of Adam Aron as a CEO. I don't think it's just him though. I think it's the whole team. Have they done things to improve themselves over the last few years? Yeah. I think that you could argue though, if you look at the debt and you look at all the things that have happened, I still think that AMC, in my opinion, is in a better financial situation. There's been nothing but positive in terms of growth versus pre-pandemic levels. Like, we've been beating pre-pandemic levels every other quarter or whatever. And these are pre-2019 kind of levels that they're talking about. And so it's like, I don't really know if there's a strong enough argument that this should be a company that goes bankrupt. I do think that, yeah, it's a company that certainly has some struggles. But the thing is also like, you're saying like, hey, dilution is bad, right? So therefore we don't, but that's not, you have to take into consideration, like, where is this? This is $70 now. But it's not, it could be exactly the same. It could be another 72 or 76 run. It looks like almost right on the dot. That's where it's going to hit, which is really weird. And I've talked about that before, where it looks like the same value, but it's not the same value. So just to counter that point that we have no reason to be here, well, if it's just because of dilution, well, we're not at all-time highs. We're right here. That all-time highs are up at 341 now. So if we can say we have no justification for going up to 72, then I would just say, well, we're not really going to 72, are we? We're not really going to return to all-time highs in a lot of ways. We're going back to a valuation that's not even as high as that. If at best, you could take this and you could say, well, I'm going to use the chart shift and ignore the rest of that noise. And let's say it does go for the spring and it rockets up. Well, even if you use that chart shift value, it doesn't ever get back above all-time highs. So even on a valuation chart standpoint, and this I've done a few times, this same value, if you want to consider it just about value, it's either here or here. This is like 100% less than the top. It is not the top value. See, this is like 133% difference in valuation. So if we're talking about going to 72 value-wise, then I think pre-ape and pre-split, we're really only talking about going back up and testing 35 on that original level. So for example, if this chart never moved around, then what we would say is that we basically went to 35, then we went to like $2 or something, right? And then we went up to 70, and then we went down to like $1, right? Because that's pretty much where we were. I mean, we went low, yeah? And then when we broke back out, we only came back up to 35. If you look at the chart that way and you ignore all the noise and you were to make an argument that really this is what the chart looks like without all the bells and whistles and all the weird stuff, from a valuation standpoint, I don't think this is like super unrealistic. To me personally, I'm like, it's not that big of a deal. It just looks like it's trading within the range that it's really built for itself. So I don't find this to be incredible at all. I think it's very low, and I think that's why a lot of people got turned off from my channel, because I talk about these things and I'm like, it's really low, right? And then I'm boring on top of that, so that doesn't help. But you know, there's people that are like, hey, it's not gonna, you don't think it's gonna go to the moon? And I'm like, no. You don't think it's going to $1,000? No. Why not? There's a trend line up here. You could go all the way up to 1,000. Yeah, there's a trend line all over the place. But, you know, until it assumes an uptrend, I don't see any reason to think it's going to go that high and make a higher high. So for me, I look at it, I think about it like this. Like this is basically what I'm arguing, is that I think it could go back up to 70, which is really like the bottom of 30. It's like 35. So that's it. And this is still within like a downtrend, so it's not even like that unrealistic. That's another thing that I'm like, yeah, that doesn't mean it's true, but it definitely seems more reasonable, like that we could come back up and get stuck here and then piddle out in this range again for a time. That makes sense to me. I mean, it just looks right. Again, I know that you said that too. That doesn't necessarily mean it's right, because I think it looks right. But this to me makes sense. And then they just chop right here for a bit, down in the 15s to 20s. If this was like a normally healthy company, I think we would assume that $15 a share is not a big deal. It is the largest movie chain in the world. It has the most reach. It can make the most of opportunity, then it will be fine. I don't know. I don't think the squeeze was as big a part of it as we think it was. Because even if the squeeze was real, like all the way, it's really hard for me to reconcile, again, why was it building out to that over time? Why does the point and figure match the breakout? Why is the timing a perfect 2-year cycle from the breakdown to the return? Why did that happen before COVID? Why did that happen before the Reddit community came in? And then if the community had any huge part in it, I would suggest it was when it broke out and then the buy button was removed. I don't think that beyond that there was a whole lot more to the manipulation, because I think that the operators that were in the stock made a huge amount of money and they bought back in. They did a reaccumulation, and it's pretty textbook. It's not like it doesn't look like a tit for tat. It looks like it was taken up on purpose. So I'm like confused by the second part of the move, especially for AMC. Now GME, maybe a different story, but I find the same things there, and it bugs me. If it were just one-off thing, if I was like, oh, this happened one time, like right here, and that's it. This is the only time this ever happens in the market. If this was the only time you ever came back to this trend in the market, then I would be like, this is so bizarre, right? It had to be something, but it's not. This happens all the time in the market. This looks like a spring into an SOS that then hits that cat ear interception, which is the wave cross. Like it happens all over the place. And the last 3 years of trading have kind of convinced me that this is not a unique thing, and that bothers me because it looks like a unique thing. It looks insane. But I'm like staring at it like, I don't know. It just, to me, it looks like a spring with a creek jump. Maybe there was something that forced her hands to do something else, but maybe it was distributing. Like, I don't know, but it definitely just looks like a spring with a creek jump to me. So I'm like confused by and then the fact that it came to the center mark of those cat ears really bothers me, because it's like, on a big picture perspective, that happens all over the place in the market. I don't know if there was more to it. You know, I believe that it did catch people unawares. I believe that it obviously really screwed over some people. But maybe somebody saw the writing on the wall and just like capitalized on it, took out some competition, and that's really what happened. I don't know. So they used what was already there. We talk about predeterminism, and I said, like, I don't really think everything's predetermined. There's just paths that are there. So maybe that was this is just a path that was already there, and it was just taken because of the opportunity. I think that's possible too. But regardless, that to me is like the same right now. Like, there's paths that are there. They may not be taken. ultimately, I don't know. But if we can get up here and generate some kind of a what looks to be like an SOS around 1230, and I don't see why we can't if this springs, I don't see why we couldn't do that, then we should be able to go all the way up to, I think we should go all the way up to 70. That's the path. If we come up here and we hit 15 and then chop down and break down, I mean, that's different. Then we're not doing the same thing. It's not obviously bullish, then you have a problem. So we'll just have to wait till we get there, I guess. And at the end of the day, I don't know. Like the reason I changed some of the model on this this channel broke a bearish trend line at 25.40 on the hourly chart, remains below the 100-hour moving average and 225. Yeah, so I don't have all the answers, Shouldn't pretend like I do. Yeah, so we went the low route here. We went like the opposite way. I don't even have it on the chart. Where's all my lines? This isn't right. So this looks like I just didn't have any kind of clue what I was talking about. Well, this didn't break up and over, so I mean it just didn't happen. Again, it went and head faked. That's what it looks like. Popped up and then failed. But I think we had talked about the and it does look right. We talked about this before because we talked about the possibility it comes back way low on Doge. Close enough. Yeah. This isn't my chart. I think I'm on the wrong page. Oh man, AMD came way down. That's good. Actually, it might be here. That must have been a different chart from a different time. No, this doesn't have anything on it. Where is my chart? That's not good. I don't know where my chart went, guys. Should have been in one of these windows. Let's try this one where Fang is. Well, it's the case of the missing chart. It's not here. Darn it. I'll try this one, I guess. No, I just did this one. It's not this one. Try this one. Sorry. All right, it's gone. I don't know where it is. is it should have been in here, and I'm missing like all of my trends, and I don't see it. So they're not even in the object tree. Why is this not zooming out? I thought I was able to get like the whole thing. I guess not. Sorry, y'all. I was gonna try to do quick Doge, but it's not really working because I don't have my chart, so it's not gonna be quick. I'll make it as fast as I can. I don't know. It doesn't look right. Why does this look wrong? All this looks wrong. Maybe I got the wrong one. That's the only Doge I have, though. Something's wrong. So something's way off here, and I can't quite put my finger on it. Maybe it's just the way I'm charting it. I'm not sure. I don't remember this not touching that bottom line. It's not even close, and I'm confused. I also remember this interacting with the middle differently, and it looks wrong. I know my memory is not what it used to be, but it's not that bad. This all looks completely different. What the heck? What did I do? Is there something wrong? Did I do something wrong, or did the chart change? I feel really sort of dumb, but I feel like I'm going crazy, actually. Huh. Okay. Well, I charted it in January, and this does not look like my chart. You pass it? Well, I had some levels down to 21 cent and then 19 cent at that time. I'm trying to find, here it is. This is Doge on the weekly. What the heck is wrong with this chart? I'm sorry. So it's something is really off. I don't know. I must have just misplaced it or put it in the wrong spot. I don't see it. I think this is correct. This is more correct anyways than the other one. They're both fine. We can do the angle differently. I did it this way because I was looking for, and this is why I'm like annoyed right now, because I was looking for the that cat ear type deal, and I think it's there because I'm looking at this right here. This guy. It's very odd though. It's still like slightly off. Yeah, I think that's closer. That's better. Yeah, that's better. I can't get my finger on it, guys. I'm sorry. So this is the way it used to look, and it just looks really different. So I'm not sure what I did wrong. But it just looks completely different now. So I'm not sure. That's in the right spot. And that's also in the right spot. Man, I'm just flipping annoyed with this. Sorry. Well, it's somewhere around there. I don't know. I can't quite put my finger on it. I really am trying to figure out why it's not the same. It's the same ticker, and I'm pretty sure I would have saved it, so I don't know where it went. Yeah. But the other thing that's challenging about this is it's like missing the that's correct. That's the right one. So I've got the right marker here, which is probably the most important thing anyways. And that on my other chart was like red. So what it's hard to see on here, maybe I can open this in like a browser window. Maybe that'd be easier. I can zoom in. Right. So what's hard to see on here is like this big picture chart that I did. What I thought was that this red path seemed kind of likely as well. It just depended. So like one of them only went to like just above, and it never even came that high. It went up to like 30, maybe like 45 cents or something, right? It was between 67 and 36. So if you look on this chart, and then it would come back down to the bottom. What that is, remove it. So this right here was the idea, like way before we broke out, we did this chart, and I had a build out that would jump up to near the top. It didn't end up going that high, which is fine. And then it would back up to the creek and come back down and then potentially go back out and up. Once we got up here, then we built out a little higher, and then it took longer to chop down, but we've basically walked back down to that previous top. So that's kind of where I want to see, I guess, this price action pick back up. But I don't have, and I'm trying my best, but I don't seem to have a great grasp on this trend. I think we're close to it, but we're not quite on it. I don't know. And it just looks off, so I'm a little bit perturbed right now. As I feel like it wasn't that way off before. Whatever. So locally, this is kind of where I said it. I thought it might come back to eventually. When you look at this on the grand scheme of things, this would be not quite an SOS in some ways, because it did come over the top here at 35. It didn't come over the ultimate top. This is more like a giant creek jump than a true SOS. But, you know, this happened previously, and you can go back and look and see, yeah, this was the chosen level. So maybe it is the SOS, not the buying climax. This one's a little different because I think it did come over the top. It backs up pretty far. It still has that jump right here. So moderate differences. It's just the chosen place to distribute. And I say distribute, I don't mean it in like a hyper bearish way necessarily. I'm sure you could take it that way. But my biggest concern with this one was that it was going to get too overblown too fast and need a deeper backup. So I remember saying that I thought it was going to look kind of like this guy, which is why I drew the backup like here. And that's the way you saw it on that other diagram. Because I was like, well, if you look at RSI, it already went up really high. This second one, it went up high and then it chilled out, but it started from a higher spot. And so it gets overblown and needs a longer, more complex cool off. And so we're in the same kind of boat right now. It looks very similar. It may be a little challenging to see it. But if you look at this area right here, and look at that particular push up with the second push, and then you look at our area right now with that particular push up and the second push. For the most part, say it's pretty much the same thing. So we had that push up, we tried to make an SOS, we didn't make it. So what needs to happen is that we need to hold some kind of support. Now, there's a little bit of a difference at this point because obviously, like, even if you were to use this lesser creek, it doesn't come all the way back down to the bottom, and then it clearly doesn't come and even touch the top here. So we have a little bit of a weakness right now on Doge. It's not as strong as it could be. It did hit the creek. I think that's a good thing. Yeah, it's like right on top of it. The problem is that it went below that top, which may not be the end of the world, but I think that's actually a pretty important level too. This would have been the more important level. So I'm not really happy that it came below 21. So what I would say about this, aside from like this obviously not being correct and not going back to the upside, which is fine, because again, when we looked at the big chart, which I don't have on here, I had it going back down. It was really simple. It would have been like here, and then down, and then across and back up. But I don't know if I would have put it that far low. I guess that's what I'm trying to say. I'm not sure. So it's doing something a little different this time. Not always bad, but so for Doge, the weekly is not likely gonna get oversold because it's not been oversold in a long time. I mean, it's possible it comes down a little more than it has been in a while, but I don't think it's necessarily going to get oversold. So the weekly might not be the best indicator. So maybe the daily is a better indication of possibility of bottom. So the last time it bottomed out was here in July, and it kind of skirts in to a low and then still builds out and makes new lows, which does kind of follow. I mean, if we're skirting into a low here, you see how this creek, when it does it, it comes back up, but it actually goes back up and checks it and then drops again. And these are just a series of, again, LSPY, 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 just constant bear flag, right? Bear flag. Pretty much all pointing towards that top, by the way, which was part of the reason why I thought it was going to be an easy enough trade. And it was pretty easy, you know, for the most part. Yeah. They're starting to get a little bit of acceleration into that corner. And then the last one is like right here is really compressed, really steep. And yeah, it made a low before then, so it dropped down to, just trying to get kind of an idea of what it might be like trying to do here. I think it's just layering up. The only concern I have is that it's coming down like steeper than it did previously. That'd be my only major concern, because that is one of those things that happens in like bearish setups sometimes, where you're accelerating up, but your drops are getting steeper and steeper. And that does make me not feel great, because, you know, in the end, you don't want it to go down if you're bullish on it. So bears are trying to get it back down to like real low lows, probably around 8, maybe 5, 6 cents. This range. It may not be that nefarious. The desire may be that, hey, if we can break out of these trends, then we can just go for liquidity that we haven't actually gotten before. We can trade a different range and test liquidity down here. It may not be like we want it to dump forever and ever, in which case this could be if a cat ear distribution. But we already knew that, because I talked about the possibility that this could be that if it doesn't go up again. So to that end, really would just have to wait and see if it makes the rebound and continues. And if it doesn't, then it doesn't. I mean, you could have a UTAD here. It's super straightforward. Right? You can go up again and then drop. But I think that the nature of it shouldn't be really need to be any more complex than that in some ways. IWM moving average 180 across 225. What's going on IWM? Actually, it should be on this chart. There we go. Great. That was like my buy-in level. Ooh, look at that, man. Gotta go buy some IWM. You're like, don't you think it's gonna dump? I don't know what's going on. Maybe. It's at the bottom of the trend, so it's way oversold. It's a gamble. This was from a little swing trade I made. Sorry to get distracted, but when you get an alert, you get an alert. You gotta pay attention. 1, 2, 3, 4. It's all there. I need to clean this up, though. It's a friggin' mess. Excuse my language. Yeah, this was the level I want to come back to. It's looking good, man. I'm still a little worried this is going to go to like 212, which I said a long time ago, that this might come down to like 211. I'm a little bit nervous about that. But we may get a reaction up first to like 223, just because it's so oversold. Yeah, I mean, it wouldn't surprise me to chop and then drop. How bad is it on like the higher time frames though? It's not that bad. I've been worried about 211 for a long time. But ultimately, this was a bounce that made a higher high. If it can hold here and go and break out, then it should just go, like really go. Like big, big moves. Yeah. Well, I'm just concerned it's going to come way lower. I guess that's my biggest concern right now. It's going to come way down. And like double bottom or something. All right, well, I'm not sure there's a trade here. It's getting there though. Look at that. I don't think it matters too much where it lands. Yes and no. Every chart has, you can't have, it's like a yin and a yang situation. You don't have TA without people using TA against you. So, you know, you got to take it for what it is. There's never going to be like an easy button for the market that just does everything for you. Regular chart analysis, though, isn't completely wrong for AMC. I don't know if you're referring to something specifically, but a lot of the most basic TA understandings that I've seen on AMC ended up being the most correct. So I'm not sure that's a really, I think it's a very loaded statement. I think using the wrong kind of technical analysis can land you into trouble. But when we talk about lows recently, yeah, like there's been a lot of places that have had support that we lost. But losing support doesn't mean that technical analysis doesn't work. It just means you lost the support. You know? There's nothing else to it sometimes. You can know exactly where that support is, and that is good TA. But to say that that is going to definitely hold, that's a supposition. Like it's not something that's guaranteed. There's no guarantee anywhere in the market that says it's definitely going to do this or it's definitely going to do that. But if you know where the support is and then it bounces on the support, guess what? Your TA was correct. What if it then goes up and starts distributing and then it goes through it? Okay. The TA is not wrong. The TA is static. Its technical analysis is static. It's like money or something. It's completely neutral. It's 100% just data. It doesn't know right from wrong. It doesn't have the answers. It's never wrong because it's never really right in a lot of ways. But if you know where it is, then you get it right. Okay, great. Well, you capitalize on the TA. It's just a tool. I guess what I'm trying to say. And I don't personally think that AMC has done anything out of its own character. Like it's pretty much always acted according to a particular way of trading. And it doesn't feel good because it's constantly made new lows, but that's been the MO. Until that changes, then that's the way that the operators have run the chart. The people that have the money to move it around and make noise. So I think there's an element of yin yang where like, yeah, you can't do TA without expecting an operator to abuse it. You also can't abuse TA unless it's actually there. So in order for there to be operator manipulation of retail, there has to be some kind of expectation. You don't have expectation without TA. Well, then is TA pointless if they're always going to abuse it and this and that? Yeah, maybe. Some may argue. Well, look, it didn't break out here, Booksy. See? Okay. Was the TA wrong? Or did it make a sign of weakness, pump up, and then distribute? Why did I have an alert set down here at 218 if I thought it was going to go up? Because in order for this to go up, it needed to break back above 230, which was this top right here, and it didn't do it. That's why this one never triggered. Did I buy in here? No. I traded this little bounce the other day on IWM. So is my TA wrong? No. It just didn't go the way I was thinking it might go if this jumped up and was bullish. I was hoping that this was going to be like an even atom bottom, but an even atom bottom isn't confirmed unless it breaks back above the top. Didn't break above the top, not confirmed, not an even atom bottom. Could it be something else? Sure. There's a bottom here at 217. That's why I had an arrow here and I had an alert set that just took me away from the other chart, because I knew that if it got down here, I might want to consider buying in. Am I going to buy in right now? I don't know, because I needed to see what was going on with the chart when we got here. And I'm not really convinced that this can't come lower based on what I'm seeing on the daily chart. Daily chart doesn't make me think that this couldn't continue to drop down at this point in time. It's testing again the 180 on the daily, which is great. And last time we tested it, we had a pretty massive move to the upside. That was, massive for this chart, right? It's a 7.5% move or whatever. Sometimes it does double bottom test it, but is there anything here that's particularly concerning that might make me think it goes lower? Yes, there's a gap zone from like 213 way back here. I don't necessarily think it needs to go significantly low. Could it get there though without breaking through the previous creek right here? Yeah. Could it get there without breaking through the major uptrend? No. So you take what it is and you just roll with it. What if it's an extension like it was down here and they're using the extension on the uptrend? Well, that's a possibility. This had a head in like a double flush kind of motion where it popped up and went below. And then really like it stayed within there, but sure. Could we go down to 211 and get that? Yeah, my point is that just because it's AMC doesn't mean that when it's wrong that it must be AMC that's causing it to be wrong. Do the operators on AMC have all the cards in their hand? Yes. But that's true of any stock. Like any stock in the market, the operators are going to be the ones with domination, not retail. Because we don't have millions of dollars to throw at it and push it around. We just can't do it. But I don't think that there's anything wrong with me looking at this and saying, if it doesn't break out, it's probably going to go down to 218. And then when it doesn't break out, I'm not sitting here crying and saying that it just doesn't work. It has nothing to do with TA. TA worked just fine. It has to do with the price action. Price action doesn't have anything. In some ways, it's not completely irrelevant, because if you're doing the TA, you can look at for certain things like I did, and I was very concerned that this came up high. I don't talk about IWM on here that often, but the fact that this broke to a higher high and had that push low, but then didn't advance and it came up too high, that's an SOW, like that's TA right there. That's bearish TA, because it's saying that you're trying to advance but you're failing to really hold. And then again, it slid through, and now it's really capitulated and it's seriously dropping. I didn't play puts on it. I wasn't really thinking about that. But I do think that AMC, for what it's worth, is a very challenging chart. Mainly because it has so much volatility in it, and yet it is very difficult to trade successfully, even in the midst of that volatility, because it takes like the extra step that a lot of other tickers wouldn't take. Like it does like extra up thrust, or it does like extra down thrust, things like that. Like there's just these extra little bits that don't really belong anywhere. It was like when it did that LSPY and it went all the way to the top, and you're like, what the heck is that? You know, that makes it challenging, but it's not impossible. It's just difficult to, like I said, it's not impossible. It's just challenging, and it's got those extra bits in there. I think because there's a huge amount of retail investment in it, the operators do crazy stuff to shake people out. But I don't think it's a special flower in that regard, though, either. I think there's plenty of other stocks like that are challenging and difficult. So, well, the daily's not oversold. This is a pretty massive bar. That 4-hour bar is huge, 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 huge. Big dump on the hourly away from that moving average. It just lost it. Got a little bit more room here on this trend. This would be considered the SOW right here. I think we're going to get some kind of reaction, probably back up to, I think there's a decent chance we're going to get a reaction pretty high. Like maybe back up to 224. All right, I'm going to try to take a position. I'm going to be careful here because really don't know how long it's going to take. So I'm like checking these creeks. This is next Friday. So let's double that time. So Monday, March 10th. So like I was on Doge, I kind of got distracted. But just to finish really quick on Doge, it's really in a okay spot as long as it doesn't keep making lower lows. I'm not really particularly concerned, but there's a lot of space here. I mean, it could take a long time. This could be May. It's like May, June, like we were talking about with some other things. It could take a long time before it breaks out. So I would just hold fast and see what happens. Leave it at that. What the heck? Excuse my language. I was like, this better be up. Bought these puts to hedge, not they're just sitting there. All right, that's a 60% trade on these AMD puts. I think I might just get out of them. I don't really want to deal with any kind of rebound. I already did it, actually. It could still come way lower. But I think I'm going to go ahead and exit just for the weekend. Good trade. Good gain. Easy trade, except for that pop today. Filled at 111. Well, I have no idea how much I made on that. It's probably like 60%, but it finally came down, man. I was like waiting for this for so long. So frustrated. All right, I'll post that later, but I'm out of that put position now. Well, I kind of agree, Dave. And I am totally offended. No offense, but I'm going to say something offensive. Nah, man, I don't. Man, we're really red in the market today, aren't we? All right, let's see here. But yeah, that was all I got for Doge. That 1 hour is getting pretty deep, but it's gone farther before. This thing dropped down to, that's a pretty massive drop over here. It could easily be this a similar drop. It's instigated it in a different way though. Well, there's no harm in looking. Take a look. Shoot, I mean, I guess if I swing it and I swing it out, I'm swinging out today, that's fine. A safer thing would be just to kind of wait until this breaks out on RSI and then buy in. But I kind of want to catch an auto reaction just to do it. I doubt that we're going to get, oh man, that's a massive sell down. A lot of volume. I think we're going to get a big reaction. That's why I'm looking for it. I need to pick out like March. Yeah, it's turning up on 6 minute. I think it's going to build out a bigger, probably going to build out a bigger range. Excuse me, down. So I'm going to guess that I'm going to say it's this guy up here. It's probably going to be used. Nope, it's too shallow. Well, that might be where it reacts to though. I'll keep that. Either of those marks is good. What did I say? March something? Over past March 10th. There's March 14th. I think 220. Even though it may come up much, much higher. I think it's at least going to come up to here on a reaction. Oh, it's expensive. Of course it is. Shouldn't be that expensive though. Well, if I'm just trading a reaction, probably could do something way more short term. Maybe I could do the 7th, see if that reduces the cost. Yeah, it's like $1 cheaper. Yeah, it's way cheaper. What's the range today? $2.97 all the way to $6. Jeez. It's already dumped $3. I don't think I could afford very many though. I think I'm going to go closer because I think I just want to try to trade the reaction on the bottom. So I'm going to try it. Still not super cheap, but I bet I'll get it. Even if it's not today, it'll probably be Monday. I'm not so sure this is even like half over. This could be like a cat ear 1-2. May end up going down to 215 or something crazy. But I just feel like it's going to have a big reaction off this bottom. There's heavy, heavy volume right here. So that's probably the halfway point, the shallow bit. Yeah, I think it's about done. Well, we'll find out. What are you doing, Booksy? What's up, Swamp Fox? OPEX today, so it's red. Yeah. It's okay. Somebody's making some money, so. Let's see how AMC ended up today. Okay. It's a double top. That's not bad. It's a little early though, because still have a couple hours, but it looks like it's going to break. It's not over. I'm just saying. It's a weird looking chart. I don't know. I still would not be surprised if it came all the way back down to 323. But I can see why that might yield something of a larger push-up. I think it's probably it's about the same. I think there's a chance, yeah, you can see the way it's layering up here, that it tries to go up again even today. And it may just kind of fall flat. So we get like a push here. Really can't tell though. I guess that would be the 350 though, right? Eh. Well, I mean, that's pretty easy. I guess if you wanted an easy swing trade, like you could take that. I don't know if you get much for it, but it's definitely an easy trade. It's more than likely going to happen. Anyways. That's the one. Yeah, so this is a bit of a tricky situation. There's kind of like half a dozen different things that could happen in that setup, so. The middle is here though, so let's try that again. There's a lot I don't have on this chart right now because I switched my chart around, but try something else real quick. That's fine, close enough. Doesn't break. I feel like it has to go back up, but maybe it checked it enough here. I think it's going to go back up to 350 and probably just close there. I really don't know what's going to happen Monday. There's a number of possibilities. I gotta do some other stuff today, so I think I'm gonna cut out now. Just peace out for a bit. I'd like to have I was hoping to have kind of an answer for whether or not this was going to be that kind of bullish setup. But if this goes down and it does like a little spring here and then reacts, we're not really going to get the answer that I was hoping for. This looks okay. I don't think it came too high. The fact that it's a double top is fine. It's not going to hurt anything. It looks okay. It certainly makes me feel like it's possible that this is going to be bullish. Obviously, continue to make lower lows is difficult because you're like, well, it just keeps pushing down. But in reality, if this is a jump over a creek and we see it advance past 350, then yeah, I think it's in a good spot to potentially just go right over there. I'm not convinced it's going to do that yet, and it may not do it today, which is kind of where I'll be like, ugh, that doesn't give me a whole lot of confidence here because there's been like kind of layering down at this angle, and that's where the next layer is. So it would stop short of a breakout if it ends under 350 today. You wouldn't be able to know. And that leaves the door kind of open. Because Monday, in theory, you could have this thing push up to make a higher high here, and then you're now in a much more bullish position where you could start advancing again. And pretty much at that point, you're just waiting for it to take off. Whether it's at earnings or before, it doesn't really matter. You're just ready to go. Yeah, and it may not be that crazy, you know what I mean? Like straight up like that. We could have it pop up a bit and then have like a big drop or something on earnings and then go. It doesn't really make any difference. But this is very much more like of a bullish setup here, then there's not really a lot of alternatives here, except that if it rejects and then comes and makes a lower low, it just fails to advance. I think you're just going to start walking through them again. And then it becomes like as most things do, a form of an S-curve. Down to 320s, which is reasonable. Oh, there's a gap there. I didn't even know that. There's a gap right there. 330. Yeah, it seems like that's kind of in view here. So maybe we don't get all the way down to 323 like I thought. Maybe we only come down to like 330. And that's where we form like our bottom. That definitely works on this side if it ended the day up here and then dropped. So yeah, it kind of follows. All right, guys and gals, if there's any gals out there. It's okay. I don't think anyone knew that it was definitely going to dump or anything. I mean, I played puts on AMD. It's the only one I did today. I'm actually going to play some calls here, and I think it's going to break out after it hits bottom. And I don't necessarily think it's going to be like the end, but I'm looking for an auto reaction play. And I'm on a very low time frame, but it's oversold up to like near an hour, I think now. And it could go farther, so it's a dangerous kind of play here, but I think it'll make a decent auto reaction back up. At least at 220. So I don't see why we wouldn't come all the way back up to 220.65. That gap is filled there. But anyways, yeah, that's my only trade right now that I'm really looking at. Everything else is kind of just wait till next week. I don't know about GME. It's kind of just as expected. I just don't know because it's going to come down. Either finish a head and shoulder and head down to 24 again, or it's just going to take off and start working its way back out. Couldn't say for sure. All right, I'm done. You guys have a good day, great weekend, and I will talk to y'all later.